What is up, everybody? How we doing? Long time no see. Hello, AB.
Wait, Spencer, you were just with a different background.
I was there.
Was that in the metaverse?
Now I'm here. I was in the metaverse for a while. I was trapped. It was scary. Now I'm back in the real world, and I'm just as confused as ever. So, what's up, Born to Be Free? What's up, Happy? What's up, Zen Bullish? How we doing? We got a lot to discuss today. Aaron, I'm still confused. You have thoughts on the market. I have thoughts on the market. You have ideas you want to put forth about how the market performs during periods of conflict in the world, which we are clearly in right now. But I gotta say, man, I'm taken aback by this market. I'm a few more days of this, and I'm feeling how I felt in March 2020.
When you thought there's no way we could keep going higher.
There was no way we don't go back down again.
And what happened?
We never went back down again.
Okay.
So, what do I know? What do any of us know? Let's just follow the charts, follow the trend, and let's start Benzinga Live right now. This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Meta Hammond on the show to talk some IPOs. Jake Wujasik from Trend Spider. We have a
breaking news.
All right. Where do you want to start? Actually, no. Before we start with what you want to talk about, let's run through the guests for the day. I mentioned this before. If you're watching All Access, we have Jesse Kaler from Elite Trading joining us in a few minutes here. We have Brian Overby, the senior options analyst at Ally Invest, coming on the show at 12:30, and we're going to have Tony Benson running through his patterns in the flash at 1 o'clock, and Mark Moran from Litquidity Capital on at 1:30. That's the plan for the day. Now, Aaron, what is on your mind today?
First things first, I think we should talk about Square, Spencer. Or Block, Inc., sorry.
Square, Block,
whatever you want to call it.
Facebook, Meta, Google, Alphabet, Tomato, Potato, whatever.
So, Block...
Here, I'll pull up a chart.
Okay. The company reported earnings yesterday.
Yep.
Everything pretty much came in as a beat. They matched in terms of revenue. It was $4.1 billion expected.
Come on, chart.
$4.1 billion came in, but the stock's trading like 20% higher today, and this is like PayPal, one of those stocks that's gotten absolutely beat down.
There we go.
I'm interested in Square here.
Now?
Spencer. Yeah.
Oh,
not
gosh.
today. Not today.
Okay. Good.
But like just in general, because the report.
See. Now this is where it gets challenging, because we've been talking about how you want to not buy stocks as they're crashing, right? You want to wait. Whether it's Square, anything that's been getting crushed, you want to wait. Well, in an ideal world, which we don't live in, but in an ideal world, you wait for the stock to like go sideways for a period of days or weeks or even months, right? You wait for consolidation. A huge gap up like this, all it does is create FOMO. I would also like Square is on my watch list too, Aaron. I just don't know if I don't have the stomach to buy it up 25% today.
Yeah, and that's why I might wait for a small drawdown from this big leg up. But the one thing that I guess kind of worried me about the report is they cited Bitcoin as a big cause for and it's just like.
Bitcoin like trading activity?
Yeah.
Oh, we've seen this before.
Right. And
I've seen this video before. It does not end well.
And that was
that was Robinhood.
They were reporting in the quarter that Bitcoin hit its all-time highs. So there are a lot of stocks out there that trade with Bitcoin. I don't want to see Square become one of those because they have a good business outside of Cash App. We got those headlines earlier in the year with Apple maybe beginning something that would make Square's product less necessary for businesses, but I still like Block. And I mean, when you zoom out, it's still down 43% over the last 3 months. Like that chart does not look good.
All right, so you're still getting a bargain in some respects.
You're still getting a bargain. I'm not going to go out today and buy it while it's up 25%.
Me neither.
If this was going to be like a long-term hold for me forever, then I really wouldn't care. I would buy it today and say, even if this goes back down to $100, who cares? I'm going to be holding it for years and years and years. It's not going to make a difference if I got it at 118 or 100.
You know what else Square talked about last night in their report was the launch of their new tax product. Square, what's it called? Square for taxes, something like that. And this is a shot across the bow of Intuit. That's exactly what this is. If I were Intuit and they also reported earnings, come on, computer.
Is that what the secret account or secret product is?
At Block?
Yeah.
Oh shoot, I really don't know.
They have a product here. Let me pull up the Twitter page for it.
Could be. I really don't know, honestly.
It's called TBD 54.
No, because they already launched it. They already launched their. But anyway, the point is, Square's got this tax product. It's basically a free tax filing service that you can do through Square. I see no reason why Intuit shouldn't be affected by this. It should be affected by this. But
yeah, I don't know. I don't know what this TBD product is. Something to do with crypto, building an open decentralized finance system.
Right.
Maybe that's just their own DeFi project.
Maybe. Everyone's talking about the ghost of Kiev. You've heard about that, right?
Yeah, I did see that.
What just one plane?
Yeah, it was
right?
like a jet, like a fighter.
One fighter jet has been just mowing people down.
Good for
I don't
him.
know. That doesn't make me happy though. That people are dying. You know what I mean? I mean, I don't know, Aaron. I just hope this whole thing goes away soon. The one thing I will say, and I was so bewildered this morning, Aaron, because we got this headline that came from Russian state media that the Russians were hinting that they wanted to go to the negotiating table, and the market took that so seriously
This morning?
Yes. As a sign that the conflict is on its way towards de-escalation. And I don't know how you do that. I don't know how you can possibly make that call right now.
Yeah, and again, we are not geopolitical experts over here.
No, but I mean, all right. So we're just buying war. I mean, that's what you call today's show, right? Basically, it's buy war, right? Is that more or less the theme of this market right now? Buy conflict. I mean, you've done the research, or you found people that done the research. How do stocks typically perform in wartime?
Well, I'm glad you asked, Spencer.
All right. I'm glad I asked too.
Let me pull up. This comes from...
Is Taiwan next? I certainly hope not. I used to live in Taiwan.
Really?
Yeah, I was a baby, so it only half counts because I have fleeting memories of living in Taiwan, but I did live there for 6 months as a wee lad.
So our most recent example of a big military conflict, at least what we're going off of, is from after September 11th. And you can see, so it's pretty mixed, right? At the beginning, you get this big crash. SPY drew down from around the 120 levels down here, 80, but then came back. So after the war on terror, it took a while for stocks to recover. That hasn't been so far.
But again, can you go back to that chart though?
Yeah.
When does this chart start from?
It starts in 2001, during.
We were in a recession. The .com bubble had just burst, and we were in a recession,
Right,
an
so
economic recession. That's the caveat.
Here are some other examples where, again, even in World War II, we were coming out of the Great Recession. So,
The depression.
that's what I meant.
Yeah.
The Dow Jones Industrial Average gained 50%, or roughly a 7% annual return throughout World War II. During the U.S. involvement in the Vietnam War, the S&P gained a modest around 30%, and that was over 8 years. So, about.
Oh, that's interesting.
About 3 or 4% annualized return a year.
Wait, is that Wayne being glib? A modest 29%?
Over an 8-year period. That is modest.
Oh, so I misread that. Yeah.
Unless he meant
No, he didn't
modest
mean
29 annual.
No, that he would have said that. No, 29% annualized over 8 years.
That'd be insane.
Means retire.
Yeah,
that's what that means. That means go buy an island and go home. Gosh, I go back to that chart that I shared yesterday from Ryan Dietrich on Twitter from LPL Financial about basically all that matters is do conflicts occur in or around recessions or not. And we're not in a recession. We're in an inflationary environment. Inflation's bad, sure, but we're not in a recession. So
you mentioned
that leads me to believe that the market, if we look out February 25th of 2023, history tells us markets should be higher.
Yeah,
that's what history says. And then Jay Rice is also, and I don't necessarily disagree with that either, right? This is a whole other wrench, the Fed. But what are you gonna say?
It just escapes me for a moment.
All right. So
I was gonna. Yeah. I want to talk about Chevron for a second. Can you pull up a Chevron chart?
Chevron, the second largest oil company third largest oil company in the world, right behind Exxon and Saudi Aramco. Is that correct? Someone? Yes, maybe.
Bueller,
probably. It sounds right, even if it's not right. It sounds right. Chevron, what do you got for me?
All right, I'm going to pull up a chart as well. This is the daily crude oil. I think we've hit the peak of oil price for right now, because look. So here's the chart. You can see this is right where Russia invades. I'm sharing on the screen.
No, I know. Yeah, I know you are. I just wanted to see something.
See what?
No, nothing.
Okay. Russia invades Ukraine here. This is what everyone was worried about. Russia is the second.
Can you accept cookies? It's going to piss me off.
Okay.
Sorry.
Russia is the second or third largest oil-producing country in the world.
Yep.
This is why oil prices skyrocketed to 105. It was the highest price since we go to the 5-year chart since 2014, which we can't even get back to on a 5-year chart. So basically my point is the catalyst that brought us to these, decade-high oil prices has already passed. And what I'd be worried about buying oil stocks here is that because we rely on Russia for some sort of oil, the OPEC countries meet, Russia excluded, and decide, hey, we just turn the spigot on. I mean, simple supply and demand.
No, they wouldn't turn the spigot on.
Yeah, to make Russia's oil less valuable.
The Saudis would?
Yeah.
Oh, sorry. I don't know. I got to be honest. I don't even know. So you have OPEC and you have OPEC Plus, right? OPEC Plus includes Russia.
Yes.
And I'm not a member of the what's the Twitter hashtag?
I don't know.
The OOTT, the oil trading Twitter, whatever. So it escapes me right now whether Russia and OPEC are on good terms. I don't know. But if they are, that throws a wrench in your argument. But if they're not, then yeah, maybe the Saudis could do that. But I don't know.
Well, the bottom line is that the strongest, it's like us and UAE. Like if we wanted to pressure them, they do have a relationship with Russia.
Couldn't we just open our reserves and just?
Yeah, exactly. So that's one way that people have been talking about ways to sanction Russia. Say, hey, let's take away one of their most valuable exports, oil, by turning the spigot on. So
I don't know.
I would just be that's what I'd be worried about buying oil right now. I mean, Chevron's at new all-time highs. I think there is an environment where Chevron stock can do well even if oil prices stay stagnant or even go down a little bit. So I'm not quite sure.
Sorry, doing a few things at once. Oh wait, we just did that, Measy Mike, saying we just. Oh yes, no, I meant like do it more though. I meant I meant really like go really open the reserves up. But yes, you're right. He already said that yesterday. I wanted to go back to Square for a second, Aaron.
Yeah.
And it wasn't just Square. It's not Square specifically, actually. It's all these. So you like Square. I like Shopify. And what worries me now is if I'm wrong. Come on, computer. Gee, dear Lord. So slow today. It's a good laptop normally, but today is just not working out.
If you're wrong, your next stop is like.
If I'm wrong, then I'm not going to get a shot on Shopify.
Oh, you're saying if you're wrong about the markets coming back down
If I'm
again?
wrong about the markets coming back down again, I've been saying all the way down, I'd love to own Shopify, right? But at what point, and this is not a rhetorical question, at what point do you say I'm wrong, let me get in? And I really don't want to capitulate to that FOMO. But it's a question, if you have a shopping list, as you should, as most people probably do, because so many stocks are beaten down, at what point do you admit defeat and say, okay, I'm buying? Or do you just say, screw it? This is what I did in the spring of 2020. I said, screw it. I'm going to buy once a month, every single month, regardless. And that's what I did all the way until I was where I wanted to be as far as amount of cash versus amount of stocks is concerned. Do you just say, screw it, I'm going to buy the last day of every month and dollar cost average my way in this thing? Or do you just say, or do you watch the chart? I don't know the answer to that question. I really don't. I would want to own Shopify here. If Shopify gets to 800 in a couple of days, which it's liable to do, it's within their own possibility. By like Wednesday, 800. Now we're talking about, a 200-point rally in a week or so. I mean,
so here's
I don't know what to do.
I was having this discussion yesterday with someone about dollar cost averaging, and someone said they never dollar cost average in because they've had times in the past where they've been buying a stock on the way down and they keep adding to it and it just keeps going down.
Yeah.
It's not, no rule or strategy investing is going to be 100%, 100% success rate. So just like anything else, there are times to do it and times not to do it. For instance, I dollar cost average into the S&P 500 because I know historically over time the S&P 500 goes up. I can put in $50 a month or something that's, very reasonable and just build my position over time. However, I'm not going to dollar cost average into a speculative tech stock that I may have been wrong about. Like I bought QuantumScape at some ridiculous thing. And I'm not dollar cost averaging in a QuantumScape because honestly, it was a bet. This company doesn't have batteries out on the market yet. I'm betting on future production. So I'm not going to continue to bet on future production when I already have. But I don't put Shopify in the QuantumScape category. So if I were you, Spencer, and I were looking to build a position into Shopify, I would start right now. It's not all the time in the markets where you have a company, and this isn't like some company from the dot-com bubble that drew down 50% or something. Shopify is a very strong company. They've got a very good business model. They make a lot of money, and the stock is off its highs by more than 50%. So I would say it wouldn't say you had $500 you wanted to get into Shopify with. Just throw $100 into it today, and you still have 80% of the cash you were going to put into Shopify left on the table in case you're right and it does come back down. And then if you're wrong and it keeps going up, you can at least say, hey, I got it.
So nibble here.
Nibble here.
Nibble here.
Nibble here.
Gosh, it breaks my rule of
what nibbling? You can't break a rule with nibbling. Nibbling breaks no rules. There's no rule against nibbling.
I literally said yesterday and this morning, and I have not changed my mind. What's going on with my chart? I have not changed my mind on the fact that.
I'm curious here.
My appetite for new longs is not very big right now. I'm not very hungry, but again, at a certain point, I mean, at a certain point, you have to entertain the possibility that you're wrong, and so I don't know if I'm quite there yet, but give me another day or so, and I very well may be there. Maybe at the point of, I got this one wrong. We are clearly coming back.
So I'm curious.
That was the flush. I don't know.
I'm curious. Jay Rice saying it's still expensive, which I don't disagree with.
It is, and that's the other thing. It is
on
not
what, a
cheap.
price on a price to sales level, on PE?
Both. It's still an expensive stock. And did we all of a sudden in the last 2 days, did the market environment really change that dramatically? Are we out of this sell all high growth mindset? Why? Because
no, of course not.
Because the Fed is no longer going to raise rates 7 or 8 times, and they're going to
makes those growths,
and they're going to raise rates 3 or 4 times instead. I mean, I don't know. Yes, I think your answer was no. No is the answer, right? The answer is no. I don't think the market environment really changed in the last couple of days. That's why I'm sort of struggling here with my own psychology. And Jesse, are you coming on today, man?
Yeah,
Shelly, I know it's Shelly. Thank you. I know it's not just me.
I might have.
Did you send Jesse the wrong link? Jesse, we got you, man.
No, wait.
I don't. Oh man, C. Cornell. I don't know if I've seen that episode of Seinfeld. If I have, I don't remember that reference. Well,
it shouldn't be the wrong link.
Waiting on a rumor though is also not a good strategy.
Jesse, check. I sent an email 31 minutes ago. Let me click on the link.
I do think yesterday was driven by Fed expectations, because how else do you explain the fact that tech went up and banks went down? It is sort of, it does boggle the mind.
What the hell?
I mean, I'm looking at ARKK here. Just keeping an eye on that as my proxy, right? My proxy for growth. My proxy for expensive stocks. Can't argue with that. Can't argue with the last couple of days here. So my plan here, you know what? Let's do this. The close is very important, and this came up on the last show, and I want to ask you, Aaron.
All right, so I'm trying to figure out this link thing, because
you gave him the wrong link.
No, it's the right link, but he's saying it's not working.
That's not good. The question here. Let me pose this question to the chat, because Aaron is busy. Do you think, or maybe in your own portfolios, if you have swing longs on right now, if you have day trades on or swing trades on right now, do you want to go into the weekend long or net long or net short in those trades? Because I personally don't want to go into the weekend net long or net short on any. I want to go into the weekend flat on my trades, right? I don't have any interest in being like, because who the heck knows what's going to happen? Easy Mike says buy protection. I guess that would be the obvious thing to do. We could buy some here. We could go buy some SPY puts if we wanted to. Or I'd rather do the Qs. I was going to do one. I'll do the Qs.
Here's the thing, Spencer, to that point. Over the weekend, and I'm going to bring up Brian Blockchain's comment. He says net long at these prices. Of course, I'm net long at these prices over time.
Well, I'm net long. I'm an investor first. I'm a net long in general. Right. We're both net long. That goes without saying. You should all be net long, I hope. But for the trading stuff.
Yeah, and so basically, if you're holding something over the weekend, whether you're bullish or bearish, I would hate to be bearish over the weekend, because if you're bearish over the weekend, well, I don't know how much you care about those trades, but you could be bearish just over the weekend in anticipation that we open lower on Monday, that some things happen over the weekend. But I would hate to be in a position where I'm making money off of more escalation in this war. And I see it just as
that's the other thing. You feel so dirty.
I see it just as likely that we get, and I know nothing. I'm going to say that right off the bat. I see it just as likely because I don't know that we see, positive headlines like the one Spencer mentioned earlier about potential de-escalation as I do about more escalation. And that doesn't make one more likely than the other. Just in my head, I see it as like a 50-50. I don't know what's going to happen this weekend. So whether we do, and I pray and I hope we do get that de-escalation, that would be amazing for markets on Monday. And if I was holding puts into that,
I don't even know if it would be. That's the thing, is I don't even know if it would be. We've gone up since Russia invaded Ukraine. So I don't even know if it would be good for markets.
I guess not. If they thought that it was.
Does a de-escalation mean 8 hikes are back on the table? Because if that's the case, then we're going back down to either way. I don't know. Either way, we're screwed. I feel like it's a rock and a hard place.
I don't know. I think the de-escalation, even with the rate hikes, would still be bullish for the market. Maybe not for like certain growth tech stocks. Jesse, I just shot you another email.
Jesse, man, we are sending you the link. I don't know what else to tell you. The link works. Check your firewall, man.
Clear your cache.
Clear your cache. That's a good one. Clear your cookies. I don't know what else.
Yeah, and if you do, if you're throwing out like bold, what up, Mimi? Welcome to our newest YouTube member,
Mimi Rothschild. Is she related to the Rothschild family? That's a global conspiracy theory. Mimi elected to join Benzinga's YouTube membership. Mimi has access to emojis of Aaron Bree and myself and Hot Stocks Luke and Money Mitch and loyalty badges, and you can too by clicking that join button on youtube.com/Benzinga. There will be more perks offered. We're going to be aligning the YouTube membership with some of our current subscription offerings, just so you all know. So more perks to come, Mimi. Stay tuned. Welcome to the jungle.
Holy cow, the market's absolutely ripping right now.
Let's bring up my cues. I take my cues from the cues.
I did the same thing I did yesterday when I bought TQQ calls when we went red.
Since you can't do this, Jesse, I'm about to email you, man. Because clearly, whatever Aaron did ain't working for you.
What
I don't know.
Send him a different link?
Hey, I didn't say I knew the answer. I said I'm going to do it. So, and hopefully, we're gonna get a different.
If you email him the link and it works on.
Hold on a second, Jesse. I'm coming for you. Don't worry. Oh gosh, I'm so happy it's Friday, aren't you? I can't wait. I can't wait to just. The problem is, I almost think that the weekend will be worse because then I'll just be thinking about the market all weekend, which is unhealthy. It's good to decompress every once in a while. All right. Let's try. All right. Try that. And I'm going to actually try it myself, Jesse, to see if it works for you. 1 second. All right. Cues are ripping here? Yes. Same story. Can I get that charger, by the way?
Yeah.
Thank you. Works for me, man. Whatever.
Yeah, Jay Rice wants to know why you didn't listen to Options Mike yesterday.
Options Mike gets all the props in the world.
He came on in the middle of.
He came on. Wait,
when it was the hardest to be bullish.
But let's show the people. He came on. This is the cues. He was on right there. We had just spent the morning rallying, and he was on in this period of consolidation. And he said, "Yep, I'm buying." And I said, "No," and he said, "Yes." And he was right, and I was wrong for the moment.
I know, and Options Mike also said he thought the oil trade was off, so I kind of want to follow him on that one too.
Should I just go buy some QQQ puts just to give myself some?
Yeah,
it's not.
If you keep saying you think it's gonna happen, put some skin in the game.
Yeah. I know. All right. Okay. So let me.
That should be a new rule.
New rule.
Yeah, you gotta have skin in the game.
You can't complain.
Yeah, you can't just say
if you don't have skin in the game.
If you make
That's
a bold
fair.
claim about a stock going to a certain price, I want to see the skin in the game. If you say, "Oh, Aaron, you're stupid. Roblox is going to 100," I want to see your Roblox 95 calls.
Yo, your open door is still falling. are Open Door and Beyond Meats? Those are your only two growth stocks like not running today. Are they still?
Is Beyond? I think the Beyond trade might just be dead.
Might be Beyond saving.
It might be. Oh, you know what I thought was interesting about the headline with
Oh, they bounced here.
Carl Icahn of McDonald's.
What about it?
He only owns like $1,000 worth of the stock. Like it is not a big position for him at all. I think he owns the exact minimum amount of like shares needed to have a say or whatever it is. But he, like when I saw that he had a position in McDonald's and was taking them on, I thought it was like a significant position. And honestly, after watching the documentary, I think it's because he's gotten so much criticism for he only does these things to make a lot of money. So if he,
I think I saw a thing from him where he said this is not about the money.
well, clearly not, because he's only got. And by the way, a $25,000 position to, and probably anyone watching, myself or Spencer, would be a very, very significant position. For Carl Icahn, that is no skin in the game.
Yeah.
He probably holds more McDonald's stock than that just in ETFs.
I don't know what I don't know.
If he owns ETFs, if he owns funds.
Wait, the question in the chat from who was it? Asking about Square. I'm trying to fact check you right now. Sustra. The earnings were not down 27 cents. The earnings.
The EPS, they beat on EPS. I think actually slightly missed on revenue. I think it was 4.2 and they came in at 4.17.
Yeah, so no, the earnings weren't down. The earnings were profitable. They made 27 cents per share, which came in up. Not only it's two things. It's how does it compare to consensus street estimates, which was 22 cents, so it was higher. How does it compare to the year ago quarter? The year ago quarter, it was lower, but if you look at the growth rate, compare the Q3s year over year, compare the Q2s year over year, compare the Q1s year over year, the growth rate between the Q4s, the gap is shrinking. So honestly, my honest take on Square today is it's all about timing. That's the truth. Forget the numbers. It's all about timing. If Square reported Wednesday night, a bad example. If Square reported Tuesday night, it would have gotten crushed on Wednesday. I feel very convicted in that. But it reported into a market that is bouncing. So let's just buy everything. Who cares what the numbers were? Buy it all. The timing trumps all in the short term. That's my take. Okay, forget the numbers. Numbers matter in the long term. Numbers are everything. The earnings, the financials, the EBITDA, the price to earnings, the price to sales, right? The whatever ratio you want to choose, they matter. Eventually, short term they don't mean anything. So, that's where I'm at.
Coinbase, we should talk about Coinbase's earnings too.
I bet you Coinbase was higher today. I haven't looked at Coinbase in hours.
You would have been wrong for 99% of the day, but in the last 5 minutes, you're right.
All right, so it sold off the open. Sold off the open and just turned green. That's interesting.
Coinbase's chart, by the way, if you don't mind pulling it up on a daily, if you can we get a daily?
Wait, Mimi says she can't hear us. Producer Rohan, are we having any audio issues?
No, everyone else can hear us. Mimi, I would check your audio settings on your computer. So whatever your output is, make sure it's not set to like some headset that you have connected. Put it on your computer speakers or however you're watching. Let us know if you're still having problems, and we'll help you troubleshoot.
That's Coinbase chart, man. Holy crap! Remember when it got to how high did it get? 480?
Something like that. It kind of looks like we might have a little double bottom reversal pattern here.
Double bottom reversal.
Oh wait, I'm so stupid.
What?
I was just like speaking out loud suggestions for Mimi, but she can't hear us.
Yeah, that was dumb.
No, why did no one else notice that? I just noticed that. Can someone type, Rohan, can you help Mimi?
Oh, that was
just
dumb.
type in the YouTube chat how
that was
to make sure her computer.
Mimi,
right. No, stop talking.
If you can hear me, press 1. If you can hear me, Mimi. Only Mimi. No one
Oh,
else.
Jesse's here. Jesse, I'm bringing you on.
Oh, Jesse's here?
Yeah. Wait, Jesse, can we get your screens shared?
All right, that means we need headphones. What is going on here? Jesse Kaler, what's up, man?
What's up? I made it. I'm alive. We're on.
What is wrong? I don't understand.
So in the calendar event, when you go in, it clicks on. It's just every time it sends. Same thing happened the other day.
You're going from the calendar?
Yes.
Oh, that could be why.
I wasn't getting into like a regular email. When you sent me the email just now,
right.
boom, here I am.
All right, I'll get that fixed for next week.
From now on, Aaron, you're fired for emailing.
The email are problem.
Wait, no, Jesse, come on. Don't throw me under the bus here. If you look at the I emailed you twice today, not on the calendar, outside of the calendar. But you're right.
You're checking the calendar.
calendar does.
That's where we should have been clear. Anyway, Jesse, let's bring up your charts here. I would love your perspective on this.
Okay. Yeah, let me pull that up here.
And also, have you recovered from the Super Bowl hangover?
Yeah, I'm good.
Yeah, he's good.
We're good.
He's good.
We're good.
Okay, we're good. Good.
But yeah, I've basically gone. I told you like last week or whenever we were on that I went pretty much almost all cash, and I've just been trying to find stocks that I like for the long term. Tesla was one today. I put it in the chat and I called out this low here at 7. I said 782 stop when it was at 783. Got in, took 10 points, and then that's it. That's that trade. And the only other trade that we put in there was the DraftKings from yesterday. Sold this morning.
Yeah, DraftKings was trading well. I know it's kind of come off its levels a little bit today. Oh, but it's been trading pretty well since about 10 a.m. Jesse, did you see the Tesla like Kimball Musk news?
I didn't know.
Oh yeah, the SEC.
The SEC's coming after.
They have questions.
I'll have to look that up. I didn't even see anything.
Yeah, we'll probably talk about it a little bit later on the show as well. Let's see. Anything else on your radar?
I took the trade that Spencer was talking about for the war trade basically. I can't remember what is that. The one we were. I literally put it in there. I just bought one share. It's like $400 a share. I forget what it's called right now. LNT.
Lockheed. Okay.
Yeah.
Okay.
And I just put in a stop loss and walked away for the day because I was done trading and I took profit on that. So thanks, Spencer. I had a 403. What was it? 4.3% profit on that. So thanks.
I got into a DraftKings trade the other day from Spencer that performed pretty well too. So
all right, I'm making money for others, which is great.
I like jumped in and Spencer was like, "Yeah, Lockheed Martin." He's like, "Breaking out here." He's like, doing real well. And I was like, "All right, I'll buy just one." I just bought one share, and I've been taking very small trades, 1 to 10 shares, nothing crazy, very tight stops, almost risking negligible amounts that don't mean anything at that point to me anyway, where I'm just like, you know what, if I lose 20, 30 bucks on a trade, whatever. But if I can make, a couple $100 a day in this environment, let's go with it. And then that's my trading portfolio. Long term, I'm with everybody else right now. I think, it's a flip of the coin. Could we see more retracement here? Or are we going to come back and try to challenge those lows that Spencer says we're not, that, in your mind, you don't think it's going to be the low of the move here? If we come back and test those and break through and make a lower low, then we could see some further downside. But at the end of the day, I'm still buying and I'm actually averaging in on the long term without even looking at the account. I set up my parameters, what I wanted to buy, regardless of market, regardless of news, regardless of what's going on. I'm going to buy on my monthly plan. I buy every 2 weeks, and I put a certain amount of my income into about 15 stocks. And over time, my plan is, and by the time I'm 50, which 14 years away, that they'll be worth more than what I put in. That's the goal. And if I get significant gains in them, I have triggers where, if I double my money, then I'll sell 50%. I have that already in place. So I don't have to look at it, stare at it. If we get a 40% move in a day, I have alerts that go off that tell me, hey, you made 40% on your money in a day. Maybe time to take a little off the table on this one, But other than that, I'm just staying calm. Got kids at home. I'm definitely talking to the wife. She's not a big news person or one to watch. She works and takes care of the kids. She doesn't really pay attention to what's going on. And I was talking to her today about everything with what's going on with Russia and Ukraine. And it's definitely something that puts a little pit in your stomach when you think about it. And it's something it worries me, period, when it comes to whether the markets are just just the idea that can happen in this century.
Wait, do you have Lockheed's chart up right now?
Yeah.
I wonder, say we did get lucky and we got some like de-escalation news over the weekend, like it looked like the war wasn't going to heat up to it. This looks like it could be setting up for a short trade if we do get some news like that.
Yeah, possibly. You can see that it's had some pullbacks when it's ripped really high, but at the same time, this was kind of a steady grind. It wasn't like a...
Yeah, it's been moving really well since about like mid-November. Yeah.
Now, if you got one of these and it spikes up to like 420, then I think gets a real big jump on the daily. That's when I would look to short it for like a next week play, like 2 weeks out kind of thing.
Yeah, I might just stay away from it. Well, unless I wanted to buy just like a way out of the money, because that's the thing with a company like Lockheed. It's seeing increased volatility right now, so you got to imagine the contracts are a lot more expensive for the stock right now than they usually are, just with that increased volatility. But
buy the shares, sucker. No, don't buy the options.
I wouldn't want to, because I wouldn't want to buy shares of this right now, because then you're basically hoping for. I guess it all depends on how you frame it, because you could say like, oh, I'm not hoping for more war, but if we do get more war, then at least I'm, hedging. I don't know. Either way,
I was basing it off of the technicals when I heard and when I looked at it with Spencer. For me, I didn't even think about it like that. At the same time, some people won't. They probably won't. There's a lot of people that won't even trade around the war stocks, I believe too. Like they don't believe in trying to make money off of things of that nature. So
exactly. I would love to make money off shorting this. I just don't know if that's smart right now.
I like that. It's about to take off again. It looks like it's about to break out even higher. What have you been trading? What have you been doing, Aaron? Have you been making any trades today?
So yesterday I got into I could pull up my screen if you want, but I got into some TQQQ calls in the morning, and ended up selling those for a nice gain this morning. And then when the markets kind of dipped on the open today, I bought a couple more TQQ calls, and those are up about 60% right now. They were up a little bit more, but it looks like the Qs just had a small little drawdown. But I also was looking at Chevron. I think if we've seen the peak in oil prices right now, that Chevron could be setting up. It's CVX. I was wrong. I was wrong on that one, because I actually bought some puts yesterday and it opened a lot higher today. But now it's looking a little toppy on like the intraday chart.
Yeah, you're getting up to these previous resistance levels, and it's look how it complemented that so well that this could be a nice little pullback.
Yeah, if we break through those resistance levels, it could be setting up for a long trade. But my thing is, we saw the stock move higher when oil prices hit 105 a barrel, and since then we've just been moving down on the oil prices, and it looks like we may have seen our top there. And if that's the case, then I just don't see how Chevron stock continues to move higher. But again, I was wrong on that. Lost some money on the puts today, but my TQQ calls, evened it out.
And with Biden, talking yesterday about kind of basically bashing, saying like, we're not going to let them raise prices to gouge and see this as a profit-making move for the oil industry. So I thought that was kind of a catalyst for them to take a drawdown.
Yeah, 100%. And then we also, the OPEC countries might have like a surprise meeting and see what else they can do to make sure that Russia doesn't have any power with all, you can take away some of Russia's power if you say, hey, all that oil you have, we can make it less valuable by
let the dog
producing more of a. What's up, Kaylor? What's up, Kaylor kids? How y'all doing?
Good. She'd actually just let the giant Rottweiler in.
Oh, wow.
Yeah. Say hi. There you go.
Hello.
But yeah, I think that the MRO trade was a good one that Mitch was talking about as well. That was one that I jumped in. I think my camera just got unplugged.
Oh, shoot. All right, well, we can still hear you if you get the camera back great. Yeah, I was in MRO too, and actually Options Mike came on our show and gave that out at like 15, 16 bucks a share, and it ran all the way up to like 22, 23. But I don't know. On a daily chart on MRO right now, if you zoom out, it looks like we could be, kind of in a little double top territory. But again, if we can break through that previous resistance level and hit new all-time highs, then it looks great again. Also, I agree, Patrick Starr. Patrick Starr saying Google looks good. I got into Google yesterday, anticipating that split. I wanna start accumulating Google till I own a full share for when they do the split, so that way I have 20 shares.
Did you jump in on? Someone asked on here about the cybersecurity plays. I actually looked up I Google searched that yesterday and said, what are cybersecurity plays? Like, what are some national defense companies that that may see a rise in this? And then I just didn't really do anything other than the Lockheed Martin trade. I looked at these. Today I saw, I think Ryan Falona, he was trading some of these in the live as well, because they were having some pre-market gainers. But this one was just,
which one is
popped
this?
from the news, CYRN. And then I guess it's related to that cybersecurity and IRNT.
Interesting. So I haven't recently played any cybersecurity plays. This looks like a smaller market cap, but I throughout the pandemic I was playing FTNT like all the way up. And if you pull up Fortinet FTNT, I mean that chart during the COVID months from really like all of 2020 or all of 2021, sorry, it's just like the best looking chart I've seen on a stock.
Which one is that?
FTNT, Fortinet.
Not Fortnite, right?
Not Fortnite, no.
FTRT?
FTNT. Foxtrot.
Oh, nice.
Tango, NATO, Tango.
Another $400 one.
Yeah, but if you zoom out, you'll see what I'm talking about. How that, if you zoom out and go back a little bit, go to the left, you'll see the stock was just slowly grinding up for like a full year, and then now it's yeah.
This is what I want to happen to my long-term 14-year plan. This is what I want my
exactly.
My
you cannot get a better chart looking at a better looking chart than that. But now we've gotten up to this level where we've kind of just found. It seems like right here at the $320 level, we've kind of found our zone, and we've been barcoding in there right now. But yeah, who knows? I mean, this is one that I kind of view this one as the leader in the cybersecurity space, $50 billion company. So if I were going to buy any cybersecurity play, it'd probably be Fortinet.
Well, man, I think that's my time. I got the kid yelling in the background like always. But I appreciate you guys having me on. I'm going to set up some more time and have some plays for you. I think next week is going to be a big week that we're going to see some crazy action in the market. So I'm going to be really
you want to give us you want to give us some bold predictions?
Yeah, let's see. I'll give you. This is the only way I can do it. And this is how traders should. This is how your mind should be. It shouldn't be. If this is how I think anyway, that you shouldn't be like, well, I think it's going down. I'm betting it's going down, or I'm buying that it's going to go down. I'm going to strategize to that only. So I like to look at both ends of the angle. Like, which way would I go if it does what? If SPY continues to recuperate and come back here, then I like your target of 441, about $5 to the upside. And then you've got your low all the way down there at this point, to where it looks like, there's so many people that I think jumped in because of that established daily low, that you might see this thing continue to run until the end of next week, and then take a fall off maybe towards the end of next week is what I think, that you're going to come down and maybe retest these. So what I predict is I think we're going to continue to run in the S&P up to probably the mid 400s, maybe even come back and try to test close to that 450 level, and then break back down again.
Well, there you have it. Jesse Kaler from Elite Trading. Thank you for joining us today. Looking forward to talking next week.
All right, stay green, guys. Talk to you later.
Peace. All right, y'all. That was Jesse Kaler of Elite Trading. Please go check out his Discord. I will drop the link in the chat. Let me know in the chat what you guys are watching today. Let me go ahead and pull up my Benzinga Pro. I've still got Lockheed Martin pulled up here. Let's look at. Let me go to my sheet. There is another thing I wanted to talk about. Oh yeah, so this Tesla news. Essentially, the SEC is investigating Kimball Musk, trying to figure out if Elon's brother Kimball Musk knew that Elon Musk was going to run a Twitter poll asking, should I sell shares should I sell shares of Tesla to pay taxes or something? And basically they're saying if Kimball knew Elon was going to do that and he front ran Elon, he sold beforehand, then that would be a violation. I imagine it's going to be hard to prove one way or another if Kimball knew or did not know that Elon Musk was going to do that, because all he has to say is, I didn't know that. Elon just did it on his own. So I don't know. I mean, it's an interesting headline. I just don't think anything's really going to come of it. And we've talked about this before on the show, but it seems like more times than not, lawsuits or SEC investigations don't really have too big of an impact on a stock unless it gets to a certain point. But just looking at Tesla's chart, I mean, we did get some recovery here. We're now back above the $800 level after slipping all the way down to about $730. I do not like Tesla here as a trade. I still would like it long term, depending on your time horizon. But to me, this hasn't shown that it's broken the downtrend yet, right? You can see we have this double top up here. We got back up to 1,200, could not make new all-time highs, and starts moving down. And yeah, I mean, Bio Noob. Watching CEI. Quick loss against Camber Energy. Yeah, this is one I haven't checked in on a while. I have no clue what this stock is at now. Oh, geez. It's below $1. This one ran all the way back up to $4 like last fall. And now it's all the way down below $1. Oxy. Ooh. Occidental. Reports after earnings today. Ooh, this is good. So I was just talking about this because I was saying I don't like Chevron. I think we may have gotten the top in oil. But I don't know. I'm putting some skin in the game. Gonna throw out some Chevron puts out there. And this could be a catalyst. This could be a catalyst for oil. Mo Herbert's saying, what did they get Martha Stewart on? I don't know what that really refers to, so I don't know. Maybe Mo Herbert will explain to me in the chat, but I'm just as confused as you guys. Don't worry. Let's check it in our good friend Facebook. How's Facebook doing? I'm just kidding. Facebook is no friend of mine. We're still holding above $200. All right, let me know, chat. Are you guys in Facebook right now in the stock? Are you short? Give me a 1 if you're inside. Give me a 1 if you're bullish Facebook from here, from this $200 level. Give me a 2 if you're bearish. 1 if you're bullish on Facebook. 2 if you're bearish. I'm sorry. Let me mess with my settings real quick to put the watermark in on here. There we go. Now you guys can see what stock we're looking at. Well, that's way too opaque. We need a little bit less. Let's go like there. All right, yeah, that's better. All right, we've got some bulls. We got Vio Noob. We got Jonathan Lovelace, bullish Facebook from here. I think I'm seeing more 2s though. Mimi Rothschild, our newest YouTube member, is bearish Facebook from here.
Still bearish.
Oh, Spencer's back. Spencer's still bearish.
No, I'm still bearish.
So if you guys are just joining us,
I can't even get the name of this company right.
In about 5 minutes, Brian Overby from Alley Investments will be joining us. We'll be talking. He's an options expert.
Yeah, I mean, I thought I invited Brian on today to talk about how to hedge for a volatile market but I'm gonna call an audible and be like, "Yo, Brian, how do I
YOLO calls?
how do I just buy some YOLO calls and make all the money?"
I mean, so that's the thing is you can use options in so many different ways. The way I use options is probably a little different than the way someone using options strictly to hedge would be.
Yep.
So yeah, I mean, I don't know. I think it'd be hard to go into the weekend long or short.
That's what I'm saying.
We just don't know.
That's what I'm saying.
Although, if I had to pick a side, I think I'd go in long. Because then I can also hope all weekend for some de-escalation news and be happy about it.
So it's a win-win.
It's a win-win, and then it's a lose-lose if the war escalates and we're red on Monday and my long calls are.
It's true. All in or all out.
I'm all in, all out.
I should also mention at some point today we are going to be playing Wordle. We have discovered an interactive Wordle game, a way to play with you, whereas we make the word and y'all guess it.
Oh, they're going straight.
In the chat.
They're going straight FUD on CNBC. Fed officials continue to support higher rate. I don't even think that's true. I think it's literally just one guy.
No. Well, it depends who we're talking about. James Bullard has been the guy calling for more. But if you look at
if you look at the data,
if you look at the CME FedWatch tool, which
has gone up today since yesterday.
The
probability that we get a 50.
No, it hasn't.
I thought yesterday it was like 14%, and now it's 20.
Wait. What do you? I'm going to share my screen. Let's clarify who's looking at what here, because I want to make sure we're looking at the same information.
I'm not. I'm looking at your screen right now. I can tell you I'm not looking at the same information.
All right. I'm looking at this table, the probability table, based on the Fed funds futures of rate hikes going out through through the next 2 years. So this top left figure is the current market expectation for a 25 basis point rate hike in March. Base is 79%. So it's gone down. The odds of a quarter point hike have gone down in the last day. The odds of us eventually ending up with interest rates at 1.25% to 1.5% until or even above that. Until yesterday, the odds of that happening at some point this year were above 50%. That's now gone below the 50% threshold. So the market saying there was a greater chance of us ending the year below this 1.25% to 1.5% interest rate threshold as there is of that happening. So these numbers, the numbers in blue are the ones you want to pay attention to. These numbers have been going down in the last 24 hours. So we won't know for sure until three weeks from now when the Fed actually meets and raises rates, as they're probably going to, and then gives us guidance about what they're going to do after that.
Do you think we'll ever historically be back to like 5.5% interest rates or 4.5%?
Well, I thought we were going to get there, and then they stopped raising in 2018 they stopped? 2019 they stopped? No, it would take like, I don't know, maybe Brian knows, it would take like several decades of continuous economic expansion.
I was just looking back at like what went on in like the .com bubble and like 08 and all that, and I was like looking at the interest rates, and I was like, holy cow.
I know, it's pretty wild.
I was like, people were investing. It's like now if we get 0.5, it's like the end of the world, and it's like we're still at like historically low interest rates. Yep.
So we're all set. So to bring on Brian Overby from Ally Invest, and so I want to get him on the show right now, if I can. Brian is again, as I said before, I thought we were going to talk about hedging, but I don't know if you need to hedge right now. Brian's a senior options analyst at Ally Invest. Let's give Brian our new special intro, because we give all of our new guests the special intro. So let's give him the new intro. And Brian Overby, welcome to Benzinga Live. How are you doing today?
I'm doing very well. Thanks, guys. It's great to be here.
I have to ask, are you in a sauna right now?
No, it's kind of funny, but now this I got pretty lucky, and I will give you a little bit of history. But I built a tiny home in my backyard before the pandemic happened. Basically, I had a 1-year-old son for grandma and grandpa, but it turned out to be talk about a win-win. Because it's basically been my office for the last 2 years now. Because
and the price of the tiny home has gone
up.
Yeah,
this is literally a tiny home. It was a 16 by 20 foot shed that I converted into a mini apartment.
Have you considered selling the tiny home? Because the market is hot right now.
There's no way. I couldn't afford to rebuild it at these.
I saw it on Zillow.
No way I could do it.
Well, yeah. I think I saw this home
on Zillow for $2.2 million.
On Redfin.
Are you in Detroit, Brian?
Well, no. Allies are located. Well, I guess the banking headquarters and the financial headquarters are in Charlotte, North Carolina. I actually live in a little town outside of that called Lake Wiley, which is surrounded by a lake. But in general, that's where I live. It's only about 20 minutes outside of Charlotte.
Awesome. So, Brian, I thought we were going to talk about, like, what I wanted to discuss yesterday was, like, options hedging strategies, right, for your portfolio. I don't know if we need to talk about that anymore, frankly. I would just, let's start with this. Okay. Based on conversations that you are having with clients, and what is the general feeling, sentiment out there from those conversations?
All right. So in general, our message has been to our clients, and we put out a volatility alert whenever we see the VIX up above the 30% level. And on top of it, we just put out a weekly talking points about the marketplace. But whenever we have the geopolitical concerns and activities that happen, normally, if you go back and you look through the history, within a month's time, we're back to where we are, as long as the aggression slows down and there's a lot more known in the marketplace. So with that said, that's what our message has been. If you're looking at a little bit longer term, not just out to the end of the year, that we want to stay the course and just basically lay down until the urge to sell goes away. And that's been our approach and what we've been talking about with the clients. Now, I do a stock play of the day on the Ally YouTube channel. And on Tuesday, I talked a little bit about a lot of what you guys were saying, that the VIX was right around the 30 handle, trading right around 29%. And I talked about the fact that I was surprised that it was there. We didn't know exactly what's going to happen with Russia and Ukraine. Were they just going to try to take the southern/western end of Ukraine, or were they going to try to go to the capital? All these big unknowns. And that's what the marketplace dislikes the most, is unknowns. So I was surprised to see it right around the 30% level. And on my podcast that I did, I actually talked about, is it time to do a long straddle? I never talk about long straddles. And I was talking about one in the S&P 500 index, the good old SPY ETF. And part of the reason why is that I really expected more volatility than less over the next couple of weeks. And we were only going out a couple of weeks in time. So we had that spike up towards the 40 level, but we didn't breach the 40 level. So oddly enough, there was angst in the marketplace, but since the pandemic, we've only been above the 40% level in the actual VIX index, the implied volatility index, the fear index, whatever you want to say. We've only been above it twice, and it was just for a second or two. So kind of surprised that now we're actually down below that level, trading at about the 26% handle. And yeah, if you would have bought puts, well, they would have been expensive, and you'd be down just on volatility by itself, because we've really had a solid vol crush in the marketplace, not only in the actual indexes, but in a lot of the underlying stocks overall. So a lot to talk about this week. I'm just happy to be on your show to be able to chat a little bit about it.
Is that all this is? Just a volatility crush?
Well, I think focus has actually changed, and I don't know exactly why. I think it was big.
Join the club.
Yeah, I think what was really big, almost more than anything, was the fact that the Russian people We know how big of a deal it is to actually how brave you have to be to protest in Russia. But they came on out, and the news was that they were protesting in the streets. And I think that had a lot to do, and that was right around when our president, Mr. Biden, was talking about the sanctions and everything that was involved. But I do think that had a little bit more to do with the actual turnaround in the marketplace than anything that was talked about as far as sanctions were concerned. It's just that the Russian people just really aren't behind Putin, just in general. That would be my best guess.
Okay. So yeah, we can play guessing games all day as to why things are happening, but let's get down to the practical nature of this. So, how would you approach someone who says, "Okay, Brian, I've got some intermediate to short term long exposure, and I wanna potentially hedge myself." How would you go about that right now?
Okay, so if I had that type of exposure, I'm a little nervous to actually maybe sell calls against the position because I'm probably down on it. That's one of the trades that you can do. We have higher volatilities than usual. They're not as high as they could be, but than usual. And a common thing for people to do is to sell calls against positions to give them a small pillow to land on. So then you look at buying the puts. And so buying the puts, you're still paying up for them. And that is the simplest way. I own a stock. I own Apple. I can go out and buy puts on Apple, buy one put for every 100 shares that I own. And I can manage my risk to the downside on that position. But right now I'm feeling, I don't know. I feel I'm more worried about what the Fed's going to do. And I saw you guys having the Fed watch tool up next week and what they might do as opposed to the geopolitical concerns right now. I feel like the market has swung a little bit, and I would look to mainly stay the course on this position or on my positions. I don't really think it's a great time to be hedging on the downside. If I had to do it, you know what I would actually do both trades. I would do a collar trade where
explain the collar. Yeah, explain the collar.
Okay, I will. And you can always go to optionsplaybook.com, which is the book that I've written, and the collar is laid out in there. But what I'm doing in this position then is I'm trying to reduce my overall cost of hedging my underlying stock. So let's stick with the Apple theme, which is Apple's been pretty strong recently. But I would look to go on out and sell a call that's above the current price and maybe go out. And I just want to go out probably 14 to 20 days. I don't really want, because I'm more worried about the geopolitical situation than the long-term aspects or outlook on the marketplace. So I sell that call, and then I actually take the proceeds and go a little bit out of the money on the put, and I buy that put. Okay, by doing that, I reduce that overall cost of the hedge or the insurance policy. I am limiting my upside, but I am also defining my downside.
Okay. What about the other side of the coin then? What about someone that says, all right, I've got some short to intermediate short-term exposure, and I'm also concerned. So I saw what happened yesterday and today, and I'm freaking out over here. So what would you tell them? How do you hedge that?
The short-term exposure, like I'm literally just going it like out for the next.
All right, I don't know. Let's just say a couple weeks to a couple months. Let's say I had, I don't know, I had a bearish bias, and I'm freaking out now because
And that's one thing about a true hedge. You know, you're still bullish on the underlying. You still do better if the underlying goes up, and that's what a hedge really is. So if I am going to go out a couple weeks, you can do the put, you can buy the put, but that's expensive. So I would consider either just buying the put outright, and I wouldn't go out 2 weeks. I'd probably go a little shorter, 7 to 10 days, because we just really want everything to shake out with Russia and Ukraine overall. Or if I was going to go further out, and let's say 14 to 21 days, 2 to 3 weeks, I would then consider doing the collar trade that we just mentioned. So I'll give you those two options. you can hedge your entire portfolio by just buying an index put that looks a little bit like your portfolio. So if you have more NASDAQ stocks, you might buy it in the QQQ. If you have more S&P 500 stocks, which there's a little bit of a mix, you can buy it in a SPYs. Say you're heavily weighted on the financials, which that's been a hot market recently and really got beat up in the short term here. That would be something where I would really think about buying a put in, especially in the financials, because of what's going on with the banking system and all of the sanctions that are happening. And that's a big reason why the financials got beat up. But then again, interest rates are going up. So overall, I would be positive the financials, but I'm worried about the short term. I think that's one of the best scenarios that I can think of buying a put. And if you look at the XLF, very liquid underlying, very liquid option contracts. And maybe I have, let's say I have 5 or 6 banks or brokerage firms in my account. Maybe I look at buying a put in the XLF as a hedge to my banking exposure or financial exposure. A lot of people don't think about ETFs and indexes as a cheaper way to hedge.
Brian, I have a curveball for you, not from me, but from our chat, from Tupocalypse 1. And so the question is referring to a specific stock in a specific merger event, but it can be applied more broadly. So the question is, so the stock in question here is SEAC, and they're doing a reverse merger with a TikTok competitor called Triller. But the question is, what will happen to my options if I carry them through the reverse merger?
They'll be ugly. That's the bluntest way that I can say it. So if you carry those options through the merger, every single one of those mergers, it changes. Like there's no specific rule. It depends on how much cash, how many shares of stock, and they come up with something. They say, okay, this represents 100 shares of stock. After the merger, we have to come up with a contract. The basis of the contract's got to be very similar.
And wait, when you say they, you're referring to the new company, or you're referring to the market makers.
Correct. So the best they that I can reference is the Options Clearing Corporation.
Okay.
And
thank you.
The Options Clearing Corporation actually puts out a PDF that explains what your new strike price will be, what the new underlying is, what the new multiplier may change to. So my suggestion, if I have those option contracts, is maybe go and look and see what it's going to be changed to. But most of the time, you want to get out of that option contract before the merger happens. And the reason why is that if I'm a new trader, I want to trade the option contract I can understand. And believe me, they're going to open new contracts that represent 100 shares of the new underlying, and it's going to be that simple. And the volume has a tendency to drive up in those odd lot contracts. And that means you get wider bid-ask spreads, overall. Obviously, it can be offset by the market going up on that underlying, but you get wider bid-ask spreads, and that's a big concern with these adjusted option contracts.
Does it matter if the options in question here, the original options, are in the money or out of the money? Does that make a difference? Or?
Not necessarily. Okay. It just means that, options normally represent 100 shares of the stock. This might be 50 shares of the stock, cash in lieu, $20. And, just this odd underlying. And if you get assigned on that underlying or you exercise it, you actually have to give them cash because cash in lieu was figured into the actual body of the contract because of the adjustment. So I don't want to be in an adjusted option if I can avoid it.
I think that's a good summary. Tupocalypse 1. Brian, thank you for that answer, because I'll be honest, I didn't know the answer to that question, so I'm glad I had you on the show here to answer it for me. We were just shooting the breeze earlier, and one of the questions that's top of mind today is who wants to go into the weekend with any net long or net short swing positions out there, and I can't imagine anyone has super high tolerance for either of those scenarios, quite frankly. So what is your feeling as far as just where we're at heading into the weekend, and and just with any short-term options here for the broader market, going a week or two out. Yeah.
There were a couple of trades like we talked about this week in my podcast. No, actually it wasn't. It was a YouTube show. No big deal. But I looked at like Nucor Steel was one of the underlying stocks that came up on our radar. Looking for some value, looking for an industry that looks okay, and taking on new positions. We actually bought deep into money options as a surrogate for the stock. Now, the reason why you do that, you say, well, I was going to buy 100 shares of stock, but I'm just going to buy this one option contract that represents 100 shares. And it's a little bit more costly, but it acts a lot like the stock, and you get a lot of stock representation. So that's one way that I would approach it. Now, which way would I lean? Yeah, that swing yesterday, I wouldn't have been, I'm leaning more towards the bull side because of the swing, because of what happened in the marketplace after the invasion, and the fact that the Russians didn't stop. Overall, to see that type of comeback, that was really strong. And in the banking sector, I see that as an opportunity. What we've seen happen with all the financials had a really rough day the day after the invasion. Mainly because of the sanctions. And we do know, you just showed the Fed watch chart that as far as the marketplace is concerned, interest rates are going up. So going into the weekend, I would, if I had to go either direction, I'd lean towards the long side. And with that said, I would be nervous about the Fed. The Fed, what am I trying to say? The Fed watch tool, the CME Fed watch tool, is saying there's about a 20% chance that they go more than a quarter point. So there's still a chance. I think it was a little bit higher before all of these geopolitical concerns, but there's still a chance that they might go a little bit more than a quarter point. And I do think that if they do that, that's going to spook the market. So I'm a little worried about that.
21% chance of that interest rates end up between the 50 to 75 basis point range after the March meeting. So that's not nothing. It's not the majority. It's not the majority, but it's also not nothing. It's something to acknowledge. So when I say 79% chance of a 25 basis point rate hike in March, I should also add that the rest of that, the other 21% is saying that it's going to be more than that. Not no hike. No hike is off the table here. No hike is off the table. There will be a hike. It's just a question of, is it a quarter point or a half point?
And they slowed down the half point, and it would really, I think that would be a big shock to the market. But then again, I just think of them as far as, when I'm thinking of percentages a lot, how many times have you had a 20% chance of it raining and you go outside thinking you're going to enjoy the day and you get poured on? It means there is a probability of it happening, and that would spook the market. And I'm more concerned about that at this moment than I am necessarily about, it's hard to say about what's going on across the salt.
This is why part of me just despises statistical models and like that, because like 10%, 5% chance is still a chance. So 5% to me means it's basically not going to happen. But if it happens, then I said it could happen, and it's like, okay, thanks.
I know
for that.
And that's what option trading is all about. Honestly, these statistical models is all that the floor traders ever use to price options. Is what's the probability of it getting to that strike, and that's what they're doing. They're doing the math over and over again,
and they're really, really good at it.
Yeah, they are.
All right, Brian Overby is a senior option strategist at Ally Invest. Brian joining us from his second house, his mini house in his backyard, his little hut there. Brian, a pleasure to chat with you today. We'd love to have you back on the show soon. Good luck out there, and thanks for coming on. Have a good weekend.
Yeah, it was a lot of fun. Till the next time.
Till the next time. All right, it is 12:50 thereabouts. So here's what we're gonna do. We're gonna do we have a 1 o'clock guest. Tony Benson's gonna come on and talk charts with us, and then we have a 1:45 guest from Mark Moran from Litquidity. I will bring him back. Jim is saying bring him back. Kristen says bring him back. Zen Bullish says bring him back. Brian, I'm going to bring you back. Not now, but at a later point in time. Just to clarify. Thanks for coming on, Brian. So here's what we're going to do. We have 10 minutes before our next guest. We haven't done a Name That Chart segment all week. We also haven't done Wordle, and I promised earlier that we would. So we've found this new way to play Wordle interactively with you guys watching the show. I don't quite know how this is going to work. Aaron, do you know how this is going to work?
I mean, I assume
We picked the word. It's not the Wordle from today. We picked our own word, and we're all going to play it.
How do you know it's not the Wordle from today?
Well, actually, I don't because I didn't play Wordle today yet.
There you go.
So I tried. I haven't gotten it yet.
Oh, really?
No. I started playing Wordle like 8 hours ago. Not 8 hours
I
ago.
got yesterday's on 2 tries. Second try.
I had my first ever two try answer on like Monday or Tuesday.
Really?
First time. So Rohan, what's gonna happen here? What do we do?
So I'm not entirely certain.
Yeah, neither are we. That's the best kind.
I know we're just gonna start the game, and there's got to be some way to play it for the chat. I'm imagining.
All right, and yes, I acknowledge the fact that the market is continuing to go higher here.
It is.
I
thought.
I mean, we're off the high of the day.
Yeah,
but-
I mean, the last 10 minutes we've been moving lower.
All right, whatever.
Um,
All right, whatever happens in the next few minutes is going to be entirely dependent on the.
I mean, should we start it or?
Yeah, let's start it. Let's start it.
Okay.
Yeah.
Bring it on.
do. That's a nice word to start with.
Do you? No, I think I found a new starting word. I always used to do audio.
Yeah.
Yeah. This started, but my like.
Now I start with the word stern, because RSTLNE are the most common letters in the English alphabet, and stern has 5 of them. So
Yeah, but you're only getting in one vowel.
yes, but I'm getting 5 of the most common letters in the alphabet. O is not a very common letter.
Really?
Now there's D.
Yeah. By the way, this started. It's just not showing up in my vMix. I'm bringing it on screen through.
Oh
StreamYard.
no! So
But people are putting in answers. It's happening. I'm not really sure how, but here you'll get to see it right here. There we go.
wait, so how do we play, Rohan?
I wish there was more of an explanation. If
Wait,
Denver
B,
wants to
B, and
throw
Z,
in-
and B, Christian have submitted answers. How are they doing that? How do I?
Through the YouTube chat, look, Christian Gallagher wrote trend in all capital letters, but just that.
Okay, so
Okay,
put.
so just put the 5-letter
Just
word.
put the 5-letter word, nothing else.
All right, got it. So again, we are playing Wordle interactively. This is not the Wordle, the main Wordle. This is our own Wordle today. We made the word. Wait, so I'm not seeing more guesses though. I'm not seeing.
Oh, they're coming in.
They're coming in.
Yeah.
Oh, there it is from Steven. I don't see Mitch's guess though. That's strange. Mitch guessed Mitch. That was smart. I don't know why I don't
I
see.
have a feeling we're gonna run out of guesses before they solve anything.
Oh, it should be a team effort. Is that it?
I
Yeah.
think that's the case.
Oh, it's supposed to be a team effort here. Oh.
Everyone just slow down for a second. We know there's an E in there somewhere. We know there's a R.
Oh. No, don't waste the guess on happy.
Oh my god.
That was a waste of a guess.
Okay, to clarify, you have unlimited chances to.
Okay, so it's not a team effort. Every man for himself. And,
All right, wait,
and
okay,
woman.
so we know it's BR something something E at the end.
Wait a minute. That's not the word that I gave Enver.
Broke.
Oh, Jonathan. Jonathan Eng. All right. Is our winner.
I think they just started a new game.
What's even happening? I love when we try shit without testing it first. It always fun things always happen. Oh man, that wasn't the word that I gave. I thought the word I gave was different. Whatever. Okay, I didn't realize that was the word. Broke. Jonathan Eng. Jonathan, since you won Wordle today, shoot us an email. Put Wordle in the title. Or
Should
Benzinga
I
Live.
stop the new one?
I'll do
Oh wait,
one more. I mean,
Enver is yelling at us because we're not paying attention to his messages right now. He says we have 5 rounds. So this is round 2. I got it.
Oh, Spencer, we might be getting that sell-off you were looking for.
We might have preemptively announced the winner, but that's
What?
our fault, so you'll still win.
I
think the winner is the
I see
result
what
of the
you
5
mean.
rounds.
I see what you mean.
Yeah.
Okay, wait, no, Aaron, did something seriously just happen in the markets? I mean,
there's like we're moving lower in the past 10 minutes.
no,
I don't
that's
know if
why I
there's
asked.
news.
More sanctions out of the UK. That's
Bullish, bearish. I don't know.
I thought sanctions were bullish.
I thought so too.
All right, back to the Wordle.
Something ants, not pants, not
Wait,
rants.
it's wait, can I guess? I don't know what the word is. Is it rants? No, that was already
Vance?
guessed. Wants. It's wants.
There you go.
WANTS. It's want. I just gave it. I think it is. Can I guess that?
He wants.
What happens if I guess that? Shouldn't my guess show up? There it is.
Oh, look, Benzinga finished second place. All right, so the top 2 winners, Jonathan and Benzinga.
All right, so we have 3 more of these, and then we're gonna bring on Tony Benson.
3 more, and it'll tell you who wins based on the amount of
All right,
points.
I got it. All right, I'm playing along. Are you playing with me?
All right,
Are you playing with us? I
I'll
mean,
do it on YouTube
yeah.
so that I don't get.
So Stern is my OG guess. Okay. Yeah, that's right, Master of Stonks. Damn straight. What the heck? And you? We have an A, we have an E, we have... Oops. Is that a word? Soiree is a good starting word, soiree. Oh. I'm keeping one eye on Wordle, one eye on the on my chart of the Qs here. And the reason I'm looking at the Qs is because that's been that's been your leader, right? So we should make these terms. Can we, Enver? We decide what the words are, right? Because I want to make these all market terms going forward. I don't think they're not market terms today, but going forward we should make them all market terms. Blah, BLA, blah, Blair, blurp. We know it's a BLAM. Blame. That's the answer.
Damn.
Oh, RJ beat me. RJ beat me. All right. Is this the last round? Do we know? I don't know. We're going to find out. Wait. It's too quiet. We need some music. Thank you. You read my mind. Google has how to play Wordle. Thrifty, just guess a 5-letter word. Yellow color means the letter. Yellow color means the letter's in the wrong place. Green color means the letter's in the right place. So we know that it's a little bit loud. Jesus. So we know that this word starts with the letters LEA, and we know there's an S. It starts with LEAS. That's all we know. Wow. LEAS. It's least. I think it's least. Who just got it? Oh, it's lease. Steven. Steven with lease. Steven beat you all. And this is the last round. Oh, it's
Damn.
All right. It's unclear when the new round begins.
Yeah.
So it's taking all your guys' guesses from the last word. Anyway, we know there's an E and an A. This is second and third letters. And that's all we know. So I also guess B. All right. Oh, we have a C. You're welcome, everyone. Oh, wait. I think I know the answer. I think I know. Oh, no. Never
Oh,
mind.
there's no H.
Yeah, Jonathan, I had the same thought. Oh, that is it. All right, that's not fair because I did come up with that word.
Oh, my Atlanta.
I'm sorry. I'm sorry, everyone.
All right, Spencer won.
I'm sorry.
Spencer cheated.
Shit. That's the word that I came up with. That's why I was confused earlier. I'm sorry. This is our first time playing. I wasn't sure what was going to happen.
All right. Well, we can't really take the win there. I'm going to say, since we kind of already told one person they were the winner at the start. And then,
Yeah, John, just email us, Jonathan. It shows at benzinga.com.
but I feel like
Steven.
BNZB. BNZNBN.
Well, not Happy. Happy's gotten so much stuff from us.
Happy, you're an honorary winner.
Happy, you have like your entire wardrobe. I think has been Benzinga. I think.
I honestly think I've only sent Happy swag like once.
Oh, all right. Oops. Let's bring on some charts. Let's talk to Tony Benson. Patterns in a flash. Let's get him on the show right now.
Special guest intro incoming for Tony. With Mark.
All right. Okay, Happy. You can email us too. Shows at benzinga.com. What's up, Tony? How we doing?
Good. How are you?
Doing well. Would love to hear how the last couple of days have treated you and your portfolio. And can you mute us in the background because I hear myself?
Am I muted? What's the feedback coming from? Is that me?
No, it's like you're
the
playing
YouTube video
you're on the
pop up.
YouTube video. You're like your YouTube window's open. I can hear us on YouTube.
Oh, sorry. I forgot to shut that down. Usually I kill it.
That's the
I didn't know that was me.
Turn the radio off when you go to call on the radio station, Tony. Gosh.
This is obviously my first rodeo.
Yeah. Anyway, what have the last couple of days been like for you?
What are we looking at? I just got triggered on Alcoa. I guess I gotta hit share, huh?
Yeah.
Told you this was my first time.
It's okay.
Screen 2.
Oh boy. There we go. What do we got going on?
Just, well, if you want what's going on right this second,
Yes, right this second.
that would be Alcoa. I literally just got triggered on it. Just part of the position. This thing, as you can see, it's just run off. I've already got some. I've got some longer term puts on it, but which obviously aren't doing well right this second. But
How far out are we talking?
I think I'm out 2 or 3 months at least.
Oh, okay.
I think. So yeah,
That's
I'm not worried about the short term. April, so a couple months.
Okay.
But looking at a day trade, because this thing has obviously run to the moon, it's on a tear. So I don't think it's going to keep up. And you can see yesterday right here at the very open, we hit that 77 and then just tanked from there. So I'm just looking at a quick little pop for hopefully a quick little drop back to here about 76 or so.
So what was the trigger?
I just put in. I actually had originally. Well, I was waiting right here. We had this hangman. I was actually had an order there at 76.91, but then it popped again. So I adjusted a little bit, moved it up here, and basically just entered. I just threw an order out for 100 shares up here at I think 77.09 or something. And then I've got one at 77.03, I think it is. Yeah, and then 76.91 for 300 shares. So if it drops off from here, it's going to add to it a little bit. So we'll see. I would imagine it will happen while we're on here. So, but who knows? It might stop me out here in a minute. But I've only got 100 shares, so I don't care right now. If it stops me out with 100 shares, I'm not worried about it.
Okay.
So,
All right, so that just happened.
Yep.
Well, let's run through the last couple of days, though. What have you been trading, and walk us through some setups that you either took or didn't take.
take or didn't take. Actually, I've just been managing what I have because I've been loaded up on the downside. So cleared out quite a bit of it yesterday morning. I hung on to some, which I wish I would have bailed on everything yesterday morning, first thing, because I was loaded up heavy on the downside. But I did take some.
Wait, no. So wait, let's stop there for a moment. You were loaded up on the downside in what way? Via what?
Puts. I trade most of my swing trades are options.
Right. No, I know. Via puts on what though? Like individual names?
Yeah.
Okay.
Here's all.
So.
Right there.
Yeah. Okay. So wait. What is that? Is that Apple? I can't
APO
see.
Apollo.
Oh, that's APO. Right. I'm looking at the symbol. I'm just looking at the price. Okay. So APO.
Yep.
So you
basically descending triangle.
Yeah. So you go one yesterday and you're short APO.
Correct. That puts on it, but same difference.
Same difference. So So now what? So you saw what happened yesterday. You see what's happening today. Now what? Walk us through the management of this trade here.
So I'm going to wait and see how it closes today, because I think I've heard you say a couple times this morning that who's going to want to be long over the weekend. I think a lot of people will be closing out, so I think we're going to trail off at the end of the day.
Interesting.
So I will wait and see if this thing closes up here. Then I'll probably get out of it, or at least a portion of it, if not all of it. So I'll wait for the close and see what it looks like. If it stays below my stop there at 64.36, then I'll hang on to it and see what happens. So, and the other big thing I'll watch is the volume. I don't know what, as far as an intraday basis, but a lot of these that have been running, the volume's been relatively light. So,
okay.
Unless the volume really picks up, I'm gonna hang tight on them.
So wait, what's the stop here? 64.36.
Yep. And that is today's candle. I updated this just probably 20, 30 minutes ago. So that's about where it is right now. Actually, I think I have it on the. Whoops. Where did it go? Pretty sure. Yeah, so there it is on the live chart. There's a 5 minute. Oops.
Yeah, what price is that? Difficult to see.
So basically 65.
65. So you should have gotten triggered.
If I had a hard stop, yes. But I don't set hard stops very often unless I'm not going to be sitting there waiting. I mean, if I can't sit and watch it, then I'll set a hard stop. But I'll wait till the close to see what happens with this. If it doesn't stay up here, then I'll stay in. I'll hang on to it.
If it stays up there, you're done.
If it stays above the stop, the 64.36, if it closes up here today, if it continues to go higher.
Well, that's my question is what happens if an hour from now you're at 67, 68?
Then I'm out.
Okay.
I take a little bigger hit. I take a bigger hit than expected, but.
Okay.
But it's always kind of a wash. Like, okay, do you hang on and wait to see if it closes back below the stop?
Well, I know.
Back?
Yeah.
Huh?
That's the $1 million question, right?
Yeah.
I don't know.
And it's basically a wash. In the end, there's times where, I do this and I hang on to it and don't stop out right at the second and wait. And it takes off and I take a bigger hit. And there's other times where it turns back around and falls in my direction. So.
All right.
50-50.
All right. So that's APO here. Wait, now does that same logic for today? Does that apply to all your put positions? You're just waiting to see if they close near highs and then you're out?
Yeah. Yeah.
Okay,
if they stay up where they're at, if there's no signal, if there's nothing that gives me, if I go from bearish to where I'm either neutral or thinking that things are going to go bullish next week, then I'll bail on everything. But if there's no solid indication that this rally is going to sustain itself, the rally we've had over the last 2 days, then I'll hang tight.
So what would be that indication again? That solid indication?
Well, a big one, at least right now, is the volume is relatively light. And even if we look at some of these others, if you look at Apple, it's even though it's been rallying, the volume is getting lighter and lighter as it rallies. Same thing, Microsoft. Where'd Microsoft go? It was up here.
Isn't that a bad sign for the rally? Oh yeah, that's what you want.
That's a bearish sign, yeah. So
if
if price is going up, the volume's going down. There's less people coming to the party. There's more people going out the back door than showing up.
Sure.
So if the volume stays light today, then I'll probably hang tight on them. So
all right. It's interesting. So what else? You got APO. What else do you have active right now?
Got some puts on, and a lot of these I'm profitable on. I mean, they've obviously retraced a couple of days, but Qualcomm I'm still in the green on. Got big. I don't have a trading plan on there. I think I've got it on this one here. We'll go here. I'm much more familiar with this. Apple was another one that's profitable still. So this is one I cashed out sub yesterday morning. I took out. I think I had 5 or 8 contracts. So I took out about half of it when it gapped down in the morning. I stopped out, and when it started to rally a little bit, I stopped out and took profit. So, and if this thing again, I'm in a profitable position on this. Even if it rallies up to like 170, I'd still be profitable.
What is the trigger for you to take some profits yesterday? you're in the money. Your market is opening down massively, and you've got puts. Congratulations. Now there's a bit of a rally off the open. So what is your sell trigger yesterday?
The biggest part was just the gap. I mean, it's sold off and it's oversold quite a bit, and that was one of the reasons I took it. Plus, I think I had, like I said, 5 or 8. Yeah, I'm looking right now. I've just got 3 contracts left. I picked up some at 289, some at 410. I think I bought some other ones at like $2, and I think I bailed yesterday at like 5 or 550. So I'm just looking at it, going, take part of it out, bank some profit on some, and then leave the rest of it there. So I do a lot of scaling in and out, which allows me to just run with it. So it's
did I just hear an alert go off?
Hear what?
I think I just heard some alerts go off.
Yes, you did. Alcoa just hit.
Hey, live trading.
Yep, they just hit the other side. So we're in. Just hit that entry point. Now, if it would just really tank, that would be nice. Which you can see it did that yesterday. And I love this stock. It's super volatile. It used to be super cheap too, but not so much anymore. We'll see. I don't know where we're at. Oh, I'm up $4. Woo!
Very nice.
We'll see what happens with that. I'll just leave it there. I'm not too concerned about it. Looks like the rest of you can see the others, APO's dropping, Apple's dropping a little bit. Morgan's another one that I'm in. I got into that.
Yeah. We're noticeably off the high of the day. I mean, it's not. Yeah, I don't even know. I don't know. Totally don't know what to make of anything right now. We are at the mercy of the next headline, but even if you told me what the headline was, I wouldn't have been able to tell you whether the market would go up or down on it. So, whatever. All right. Any questions for Tony? If you have tickers on your mind, you want his opinion, drop them in the chat. We've got a few more minutes here, and he would be glad, I think, to offer his take on whatever charts, whatever tickers you guys are watching. We ran through a few. We ran through Apple. We ran through Apollo. We ran through Alcoa, Qualcomm. What else did you have on there on the list?
That's what I figured. This is what I'm looking at for this next week.
Oh, that's Penn.
It is Penn. I know we've talked about this a lot on here, huh?
Yeah, can't catch a break.
Is this the one that you said you owned?
Not me, no.
Okay.
No.
I can't remember which one that was, but
no, I never. Aaron has owned several of them. He owned DraftKings recently, or still does. I've never owned that I can remember. I've never owned one of these casino stocks.
I don't own any right now. I don't think.
Yeah,
I had a DraftKings call that I sold after that move up.
My mistake.
Anyway, I don't know. I'm not super thrilled about any of those names
what do you see in Penn right now?
And a beautiful inverted head and shoulders. So left shoulder, head, right shoulder, which is bullish, right? If it breaks out, if it breaks to the upside. So I think if this thing breaks above 50, which is another nice little round number, I think there's a decent shot of it going up to about 60, 65.
That's a long ways away.
It is, which is good, right? You get huge profit potential then.
What's the stop there? The 48.60? What's that about? 49? What's that about?
Yeah, I'll put it just below 49.
Why?
The neckline. So let me make that red too. I usually like to.
When you say the neckline, you're referring to this inverted head and shoulders pattern?
Correct. So that line I just made red, that's what's called the neckline. So if you think of your physical body right here, that's the trough. So just like a traditional, the topping head and shoulders, inverted head and shoulders, you just flip it over. That's one of the beauties of patterns. There's realistically, even though inside patterns in Flash, there's about 30 or 35. If you break it down, there's 6 or 8 maybe, because you take one and flip it over and you have the exact opposite. So, and it's essentially the same thing. So, So that red line that's sloping down a little bit is the neckline. So if it breaks above the neckline, then we would expect it to move the measured move, which there is 1058. So you measure from the peak of the head to the neckline, and that's the expected move or the measured move. So then you basically calculate from the neckline up, and that's about what the target should be.
All right, I'm with it. Makes sense to me. Let's do a few from the chat. The chat wants to know. Andy Lee was first. He asked about CF. Wait, what is CF? I don't know if I know that one. CF?
CF? Charlie Frank?
Yes, Charlie Frank. CF Industries. I don't know this one.
Let's see what we got here.
What is it, industrial? First time we figure out it's a chemical company. Okay.
Yeah, it's been around a while.
Yeah. I mean, big company. $16 billion company. So
obviously on a tear. What to make of it? I guess the question becomes, what's the intention? I mean,
oh yeah, I should clarify that. If you're gonna drop a ticker in the chat, it would help us if you could put your bias. Are you looking at it for a long trade, for a short trade? Do you already own this and you want to know when to sell? Do you want to get in and you're looking for an entry? So that, and the more color that you can provide, the easier it is for Tony. So
yeah, this is well, I mean, obviously it's super bullish and it still goes even though the market's been dropping. So obviously it's not doesn't necessarily go with the general market. So if today's candle closes where it's at right now, then we've got a hangman. So which is a obviously just from the term doesn't sound very bullish, right? Let's say if you're long, I mean, this thing is, if you own the thing, then I'd stay in it above 76. I don't know that and again, it depends if it's a long-term play, then I'd stay in it above the trend line, which if we come here, at least the intermediate term trend line is, as long as it stays above that level, I'd hang on to it if you're long the stock. I wouldn't trade this bearish myself. The trend is obviously bullish. And you can see lately, especially in this last rally from 64 to 80, the volume has increased pretty dramatically, actually. So obviously there's a lot of people that like the stock. It's bullish, even though the market's been dropping. So I would expect this actually, if the market does turn around and continues to rally, this would probably even rally faster, I would think. So I would look at being bullish above 76. And I don't think there's not even a high above that, is there? Yeah, we're all-time highs.
wow.
So I kind of like this, actually, as long as like I said, as long as it stays above 76. Question is, where's the next range? So there would be the top side.
So you're right in the middle of it.
Yeah. But if it sat and danced, I'd be looking for it to, if it kind of dances and builds a nice little base here about 76, then I'd be looking for it to launch from there. If it launches from there, then I get bullish. As long as it holds this line of 76. Right now, there's only a couple of days. If it sits here for a week and stays above it, if it tests it, and can maintain it and doesn't break back below it, then I'd look at putting a hook up here above it. And if it takes off to the upside, jumping on. If it drops below it, then I look at this trend line as a possible launching point.
What about Goodyear Tire, GT?
I thought I saw that one there, GT. This is one's popped on my radar recently. I've seen it, but
Goodyear.
Yeah, I remember seeing that big drop from earnings. Kind of sort of a head and shoulders, but again, what's the look at the long term on this thing? We are to a quarterly.
Holy moly. Wow. I did not realize. Holy crap. And let it be known. Let this show you that not all stocks come back. Well, this one has never come back. Not even close to the all-time high.
Oh, you're talking about the 2000 crash?
I mean, is that what that is? It looks like it's the mid-90s to me.
Yeah, actually it is. It's that's 1998.
All right.
March of 98 is the peak.
Wow.
99, yeah. So it had already, had already dropped off significantly. So going back to a daily though, let's see what. Basically, just looking for major support and resistance levels right now, where it may drop to if it does continue to fall. It's probably about $12.90, $13. There's definitely some support there about 15. If it holds that, then maybe a short-term bullish run. I'm assuming that the earnings here was obviously pretty awful. We dropped from 22 to $16. So I wouldn't be bullish on this thing myself, but if it does drop though, if it continues to fall, we're looking at the next support level is 13. So not much of a pattern there, at least not right now.
All right. Option Printing wants to look at a swing trade in NIO for next week back to the 22s.
Back to $22?
Yes, that's what that's how I interpret that.
Yeah, how long is this? Okay. Yeah, I remember seeing this when I was looking through charts. We got the beginnings of a double bottom. If it can hold this $20 level, earnings, when's that? Is that Monday? It looks like.
Oh shoot, I don't know. I'll be honest.
Yeah,
with
looks like earnings is on Monday. All right. So that's obviously a wild card. And, with earnings, you never know what's going to happen. So it's hard to get into a trade right ahead of earnings. I just, for the most part, don't do it. I held on to Home Depot because I already had I traded several contracts in and out, so I just left one there to see what happened with earnings, and it paid off. So, but if earnings, that's the hard part. If it wasn't for earnings, just a pure technical analysis, just looking at this, if it holds that line and starts to move higher, so I would look at putting a hook on there. Here's exactly what I do, and I'm put a stop just below 20. And actually, I think there's a target right up there, probably 26. I'd probably put it about 25. And then just crunch the numbers now. 1985 is a stop, target, 25, 22. Whoops. So 21.19 would be the entry point. So what I would do is I'd just put a hook up there, and I'd use either a contingent order, go pick out which option you're looking at, put a contingent order that says if stock hits 21.19, then go buy whatever option you're looking for. Does that make sense?
Option printing, does that make sense? Makes sense to me. I followed that. What about let's do a few more here. Sure, we can look at ARKK. Let's look at ARKK. I'd be curious to get your take on ARKK. It's ripped in the last day and a half. Gotten clobbered, made a new low of the move, and all of a sudden we nice little bounce in the last couple of days.
Yeah.
That's how I feel, Tony.
That's how you feel?
Yeah, just generally.
Don't follow your feelings.
That's true.
Sometimes you do. Yeah, I mean, not obviously a massive slide on this thing. Doesn't take a genius to see that. That's the beauty. It's just not really that complicated. I mean, technical analysis is not hard. If I can do it, anybody can. It's just a matter of seeing the pictures also. Bullish engulfing pattern yesterday with actually a decent amount of volume after a big spike in volume, which could be argued that it was capitulation maybe, but I don't think we're there yet. But the tricky part about candlestick patterns, not necessarily tricky, but is understanding that they are, even though we use the term reversal, reversal just means change of direction. And we move up, down, and sideways, and this thing obviously has been moving down. So it doesn't necessarily mean that it's going to reverse and go up. It usually just means it's going to stop the previous move. So I would expect this thing more or less to go sideways. The only way I would get bullish on it myself is if that downtrend line that we have in place, if it breaks above there and stays above this, whatever that line is, about 66. So if it stays above 66 and breaks that downtrend line and it stays above it for a period of a couple of days at least, then I'd be interested. But as of right now, I wouldn't get bullish on it.
All right, let's do one or two more. Let's do Rivian.
Rivian?
Yeah, RIVN. Yeah.
Well, that thing's new.
Yep.
Is this a yeah, okay. I thought I'd seen him in the car market.
Oh yeah, I'm sure you did. Oh, where's that banner at?
Yeah, not a lot there. I mean, there's not. I mean, you got kind of a double bottom, but it's building a little base. Is basically what it's doing right now. A little bullish engulfing pattern yesterday with a decent amount of volume, but earnings is coming up. So as far as trade it, I would trade it right up to earnings, but I wouldn't be bullish on it unless it got above that point right there, above 70. And the question becomes, with the market environment the way it is, how far? I mean, if it pops and it goes quick, it obviously it can, but I wouldn't expect it to myself. So anywhere inside this range, I wouldn't touch it. If it comes back down here, this 54 level, and gives me some kind of indication, some kind of reversal like it did here, got a little hammer pattern. Kind of, it's not textbook, but close enough. You might get a 3-day pop if it does that, but right now it's in the middle of the range. I usually don't touch them in the middle of the range. I'm looking for them either breaking out or building a base out of support.
All right, one more here. BLDR, a building supply company.
Builder for Source. I have seen them before. It's been a while though. Long-term picture.
Oh yeah.
I would expect a lot of these builders, I mean, just from the interest rate stuff happening, I would expect them to turn bearish, but just looking for the major points basically, which, right about there, a little support there about 66. If it cracks down, the next major point's about 53. Obviously if it breaks to the upside. There's another one. Well, that's today. I don't know where it's at right this second, but if it breaks above here, of course, there's earnings again. They're coming out on the 1st, which is what, I think Tuesday.
Oh, I didn't even know that. I probably should have looked.
Yeah, so they're coming out with earnings on Tuesday. I mean, it's not necessarily confirmed. I don't know that 100%, but usually this is pretty accurate as far as their earnings go. So that right there is a red flag. It's if I was going to trade it, I'd be in it for either a day trade or only a 1-day swing, maybe 2. I don't know if they're announcing before or after, but they're coming out with earnings on Tuesday, it looks like. So
I'll tell you. Earnings are before the bell on Tuesday.
Yeah, so if you got in today, you'd want to be out Monday. Unless you're crazy and you want to hold over earnings, if you know what to expect, or if you like, if you like wild rides. Because if earnings goes the way you expect it to, and then it could be really good.
There we go.
It worked out for me on Home Depot. I mean, I had one contract that I had made enough to pay for the entire thing, so I just left it there and ended up just one contract was $1,200 extra.
There we go.
So
sometimes it's better to be lucky than good. All right, exactly. Tony Benson, Patterns in a Flash, joins us every other week to run through some charts and hang out. And Tony, have a great rest of the day. Have a great weekend.
Thanks, sir. You too.
Alrighty. Hey, before we bring on our last guest of the week, let's do a quick crypto update. We haven't looked at the heat map all day.
AJ.
Crypto.
What's going on with crypto?
I know. So as a reminder, this is a 24-hour chart, a heat map, excuse me. So we, based on the last 24 hours, crypto has rallied along with everything else under the sun that's not named Beyond Meat. Every growth asset. So all the coins are up, with the notable exception of that guy, of Tron, which is down 3 2/3%.
Maybe they delayed the new Tron movie.
Down 10% in the last week. Man, all these coins are so freaking volatile. Unbelievable. Ethereum is up 9.5% in the last 24 hours.
I don't know if anyone else noticed, or this might have just been on Robinhood, but last night I was going through my I was just checking on like what Bitcoin and Ethereum were doing, and there was like a flash crash on Bitcoin on Robinhood where it went down to like
I hate that.
32,000.
I hate that shit.
32,000. I was trying to buy some, but then I looked on like Google and it didn't.
It's just
drop it all.
There's so many exchanges. Dude,
I thought I was gonna get filled on Robinhood for some Bitcoin at like 33 or something. I was hyped about
I
it.
hate when the exchanges, when there's crazy diversions like that, and you think, oh, I'm about to get this amazing price, and then you're not. But whatever. Some computer out there is arbitraging all that.
Oh, Patrick brings up a good point. We gotta check back up on Obama Sonic Inu.
That's not the one. How is Obama coin? What is it called? Obama Sonic Inu?
Honestly,
No, that's not what it's called.
it's
I know there was an Inu in it, but it wasn't.
Obama Sonic Inu 10.
It was longer than that.
Harry Potter Obama Sonic.
Harry Potter Obama Sonic
Did
Inu
you almost
coin?
just say Harry Potter Osama?
No. That was not what I meant to say.
Sure. Just making sure.
Harry Potter Obama Sonic
I'm
Inu
about
coin?
to pull it up. I think I brought this to everyone's attention. Oh wow, never mind. It's way down. I'm pretty sure. This might have been a rug pull. This might not have been a legit project.
Oh, you think? What gave it
Hey,
away?
let me check the 3-month. When did I get in on this? When did I put my life savings into this?
No.
Yeah, right around here. So it's on a sale. If you liked it at 0.00000004, you gotta love it at 0.00000026.
That's what my advisor tells me.
Yeah.
Yeah.
All right.
All right.
Enough of Obama.
Enough of that. By the way, everyone, if you want some free Bitcoin, open up a Voyager account. They will send you $50 in free Bitcoin if you use the offer code ZING when you sign up. Fund your account with $100 and make a trade. Check it out, Voyager and Zing. Ambry, who's our last guest of the week? Let's go home strong.
Our last guest of the week coming on strong indeed. Mark Moran from Litquidity. We've got a few. We're going to talk with Mark about some crypto as well. What's going on down in Miami? A lot of crypto happening down there,
yeah.
But some other interesting things to talk about.
That was me. But do it. I hit that button like 30 seconds ago.
Shia LaBeouf.
I hit that button 30 seconds ago, and it's just now playing.
Producer, can we get a check on our stream deck to make sure it's working?
Oh my gosh.
And then Spencer, I don't know if you saw this, but we're also going to talk to Mark about a banking compensation report that they actually put out.
Oh, I saw that
last week.
I saw that.
Picked up by New York
that.
Post, a few other outlets. So without further ado,
Yeah.
let's go ahead and give Mark our special intro,
right,
our
let's
new
do it.
special intro. Hey, Mark, how's it going?
Great, guys. I love the new special intro. It's a pleasure to be here to talk about Harry Potter Obama coin. Thanks for having me.
Yeah, I mean, we only bring on the most esteemed guests to talk about the most esteemed subjects. So, I think we might as well start where everyone has been talking. I mean, like literally, it's like there's nothing else going on in the world on Twitter or anything other than this coin.
I know. I've only seen dialogue on that and then Cum Rocket, and really, that's all people are talking about.
Nothing else going on right now. Mark, so how you been, man? It's been I guess we had you on last Thursday, so it's been about a week.
Yeah, it's been about a week since I saw you guys. It's great to be heading on into the weekend with y'all. So couldn't be happier to be here, but been good. How about you guys?
Cannot complain. Obviously on a more serious note, everything going on in the world right now, just happy to be, safe. Things are good. So, just hoping for the best right now on the geopolitical front.
Exactly. That's all we can do right now.
But let's start with that news last week. So Litquidity broke a compensation report on the big banks, correct?
Correct. Yes. So historically, what we do is, and for those who don't know, Litquidity is an Instagram page that is now turning into a media company. And so, in kind of having this following that we have of a lot of people who are kind of junior bankers on Wall Street, they submit their salary data to us. And who doesn't love learning what other people's salary is, especially juniors on Wall Street who everyone perceives as overpaid. And so we get about 1,300 data points and kind of went through, scrubbed them all, made sure they're all right, and then put together this report that it's what we believe to be the most comprehensive report out there. And it's something that got picked up by the New York Post, like you were saying, And I think it's been getting a lot of attention for both, kind of your typical reasons of, okay, you have 22 to 25-year-olds who are being paid so much money, and then you kind of break it down, and it's like, well, when you break it down by hour, oftentimes they're making less than the McDonald's worker. And so it's something. Oh, we got it pulled up. Amazing. I had it pulled up over here.
Oh yeah, if you want to pull up your screen, I just have the New York Post article pulled up.
Okay.
I mean, whatever's easiest for you.
Let me hit the share.
Yeah, man.
Share screen. Let me close out of all the other websites. I don't want anyone to see that I'm on right now. Kidding. It's a joke. For legal purposes, that's a joke. Can you see that?
Yeah, let me go ahead and get it pulled up. There we go. So what do you think it is about? Is it just like the kind of nature of working in investment banking? Why like people talk about compensation? I mean, if you look at another industry, say people going into, I don't know, just anything else. Like I feel like compensation isn't talked about as much.
Yeah, and I think too, at the end of the day, everyone, they want to be paid a lot of money, right? But for a lot of jobs, there's other purposes, other ways of being fulfilled in those roles. Whereas I think for banking, you sold your soul and you know exactly what you're getting into. And so with, the soul being sold, you have golden handcuffs. The only thing that really there is to talk about in terms of the kind of worth and meaning behind it is the money. And it's something that, everyone always wants to know how much people are paid. And for us, we kind of saw this as, it's one, fascinating, interesting. We can make a lot of great jokes on it. And for us to have all of this data, a lot of other sources like your traditional financial media, they don't have access to this because they don't have the following of junior bankers, or they don't have the trust from people because it's very sensitive information. But I think it's something that everyone wants to see. And then when you kind of put it down like we did here, and we're rolling through and kind of comparing all of these main banks. And, you'll notice there's a lot of humor added in throughout this. And that's something that I think is unique for us. But, this data doesn't get out there publicly. So if you're kind of, thinking, am I being compensated fairly for this job that I'm working 18 hours on Microsoft Excel all day? What are my peers getting paid? Then you can look at this and kind of see, and hopefully it'll be something that people will be able to reference and will kind of make sure that everyone is being compensated fairly for their efforts.
Yeah, and that's something that I thought was so interesting. I mean, last year when we got the story broke out from Goldman about someone made a PowerPoint about how much they were working and whatnot. A lot of the speculation was that, like, look, this has been going on for a while. Yeah. But now during COVID, you're missing out on some of these other benefits, like you said. Like, if you think about for other jobs, like if you're getting compensated in ways outside of pay. Like I have a buddy who he lives in New Orleans and works for the Saints and the Pelicans, like on their PR team. And he has a crazy fun job because he travels to all the road games, like hangs out with the players, like meets. And there are like thousands of kids that want to work in sports, so they can get away with paying a little bit less. But if you're just working at an investment bank, like payment, like you're saying, it is really the one thing you're getting compensated with. And last year when we got that Goldman report, the kids that were working during COVID didn't have the, cocktail parties and like the fun things in person that came with being, even if there's not a lot of fun things that come with being a first or second year in IB, then there are at least a few,
And it's interesting because I think for a lot of people, when you just hear overpaid banker, right, you're going to assume these guys making millions of dollars. And so, our focus in this isn't on kind of senior managing directors, people who are, in the 7-8 figure salary ranges. This is on the juniors who have just recently graduated college. They're working in investment banking, kind of like myself or Lit, to really create, a great stable foundation for their career to go and do other things. And so for us, kind of being the voice of the junior banker, the voice of the bullpen, as we call it, we're thinking, okay, there's kind of all these ancillary benefits, like you're saying, right? And food is one where in most industries you're not paid for dinner, right? And it sounds kind of ridiculous, the concept of having a dinner stipend. But if you'll notice on this screen, we kind of have this graphic that lays out what the dinner stipends are for various banks. Now, you don't get this for free. You get it by working usually past 10 o'clock at night. And so it's kind of an incentive for banks to say, okay, if you're going to be doing this work for us, we'll compensate you with dinner. We'll make sure you have enough. But living in New York City, $25, like your Goldman Sachs bucket over here, is not enough for a lot of these kids. And so we thought, what's a small incremental change that we as Litquidity could kind of push for? And so we saw this, having broken the Goldman Sachs 13 survey last year that you referenced, we thought, how can we take that and kind of go and build off of that? So we noticed there's a bunch of very large banks in this $25 bucket that the median stipend is $32.50 when you kind of look at all the other banks across this. But, you guys are in Detroit, we're in New York. Like when you're in cities, you kind of have all these service charges that eat into stuff, right? When you're doing food delivery. And so when you look at this, you'll notice even if you're just getting a burrito, chips and guac, and a bottle of water, okay, obviously kind of ridiculous to have a bottle of water for $3.50 in here, but like let's substitute it for, some other type of drink that's $3.50. You add in all the freaking service fees and a 20% tip, that's $33. So these kids, would have to reimburse this out of pocket. And, for us, it's something that it's funny. This is a very funny and humorous thing to do. But also, we knew throwing this out there and working with the New York Post, they're going to write a great article. It was the #1 most read article in their business section 2 days ago. It got about 110,000 views. And, it pisses off Goldman Sachs. And who better to piss off Goldman Sachs than two guys who work at a meme page?
Yeah, exactly. But then New York Post also talked about how now Goldman offers some of the biggest bonuses, which hasn't always been the case. I mean, there's always been this idea that you're willing to work for a little bit less at Goldman because you have the prestige of being able, once you leave, to say, on my resume, I got Goldman Sachs. So do you see Goldman like raising their bonuses as a direct result of what you guys have done in terms of releasing these compensation reports?
So, I would say it's a combination of factors that, yes, us releasing these reports, it creates greater transparency, especially at a place like Goldman. But also, I think it's a reflection of kind of banking is not the only way to make money these days, where historically going to Wall Street, working at a Goldman Sachs, we have Ligma Sachs, which, kind of funny play. Those hats are available on our store online, but there's other ways to make money, especially now where you can look and see, some 18-year-old making millions off of NFTs. And so I think that it's something that a lot of these banks realize, for us to continue to get the talent, away from tech, away from Web3 enabled initiatives, that we're really going to have to pay what they deserve, not only compared to other banks, but, compared to what they could be getting, if you're working at Facebook, Google, wherever. And so, with Goldman, you kind of look at that where they were a private partnership up until the early 2000s when they went public. And then, there's kind of this whole concept of organizational drift that they went through, that once they weren't a private partnership anymore and the partners weren't putting their own kind of capital up for risk, they started changing it as an organization. And I think that's representative of many banks historically, to the point that now, it's just another company to work for. It's not necessarily this, gold-plated name that it was, but because there's a lot of them out there and a lot of ways to make money these days.
Yeah, 100%. And going back to the food thing real quick, I know talking to some of my buddies in it, I'm not going to say which bank he worked at, but they had luckily, it was on the higher end. I think he got about like $50 a night. Well, theirs was like, if you're at the office past this time, you get $50, whatever. And he would sometimes do like 2 Chipotle bowls and bring one home, and he got like dinged on it. And I'm like, you're telling me this like multi-billion-dollar company gives a shit that you ordered 2 Chipotle bowls for $30 instead of 1 for $15 or whatever? And it was like, he's like, yeah, I mean, it's crazy. So
exactly, and it's so funny too, because it's like you look at in what we're portraying over here, where we have old salary bases and then the new salary basis for a lot of banks, right? And that's something that's directly attributable to the Goldman Sachs 13 survey that came out, because all of these banks started increasing their base salaries, right? But that's something that, like, once you do that, you're kind of stuck there. That costs a lot, going from, say, 95,000 to 115,000 base. But, if you're giving kids $10 extra for food, that's something that's going to be in their mind every single day when they're working, that they're going to remember and notice, and has a much more of a tangible impact than I think something like this. So for me, the psychology of just increasing a food allowance is something that, if I'm David Solomon and trying to incentivize my workforce, like, it's a no-brainer that I would do that.
Yeah, and just not caring if so, because that was what was so ridiculous to me, is they gave a certain amount you could spend, and if he had ordered a steak, that was $50, they don't care about, but just because he spent, even if it was less than the steak, because he ordered 2 meal, whatever. And I was like, who's to say you didn't just sit down and eat both Chipotle bowls right there for your dinner?
Exactly. And going back to your question though, this first quote, "Firm promised to feed us and fed us," in regards to Goldman, I think that kind of sums up how they felt. And I have a friend who was there who I was talking to, and she was like, Goldman really paid up and kind of made up for the last few years, but I don't know if that's going to be enough to keep the talent that they've been losing. And I think that's true for banking in general, that, for any of these jobs, living in New York City oftentimes sucks. And, kind of for a lot of people, they've had time to go elsewhere, to be in a different place during COVID and reset and say, is this really what I want to be doing? Is this really, kind of the best use of my time? And I think that's something that for banking, the only way to justify it is more money.
Yeah, 100%. Do you mind going back to the back a slide or two on the screen that showed can you just walk us through, in case any of our audience isn't really familiar with the investment banking process, like what so typically a kid comes out of college with their finance degree, starts as a first-year analyst, correct? Can you just walk us through kind of that roadmap that most people take going into this industry?
So basically what happens is, we'll start with Ligma Sachs over here. So you kind of have your summer internship, right? And say
how many hours a week are you working during that summer internship?
You're working a lot. Because the summer internship itself is kind of a testing ground to see, if it's something you like, but if it's also something that, you're capable of handling. And so when I was a summer intern, I mean, you're only doing this for a short duration of time. So you definitely have weeks over 100 hours that you'd be working. And then, when you're working full time, you definitely have those weeks as well, but they kind of fluctuate a little bit more. So it's not like you're working 100 hours every week because you die. But part of that is and we're laughing, but like kids at Goldman Sachs, like there's a story in San Francisco of a kid who literally did die from overwork. And for us, I think a lot of our kind of duty as, the voice of junior bankers is to, make a lot of jokes, but also to be like, hey, there is a serious nature to this, and that money can't compensate for everything. But going back to your question, so you'd start off, you'd have a base as a first-year analyst, about $110,000. We do not have a bonus amount for them, because for us, this survey, we only wanted to have bonus amounts and numbers in general where we had multiple data points. So call it, JP Morgan's 70,000 bonus, right? So you're making a lot of money, well into the six figures.
And we're talking about a 23-year-old kid.
Right.
22, yeah.
And 22 to 24 for the most part. So you're making a lot of money, more money than you'd be making, at any other job, unless you're a professional athlete at that age. But when you kind of think about it, how much of that, is taxed? You're in New York, so it's going to be significantly higher. And then, it's kind of W-2 normal taxation of things, right? It's not like it's capital gains or anything like that. Then you think about where you're living, all the extra costs that go into anything. And how I kind of think about it is, I had a friend he was working at Deutsche Bank, and I went to go visit him in New York. And all he knew was how to get from his apartment to work. He didn't know anything else, because all he had done for the year was work. So you can be making $180,000, but what good is all that money if you have no time to spend that, right? And if a lot of it's being eaten up by just normal living costs.
100%. And I don't know if this is true today, but I remember a couple years ago, my buddy who had just started working at JP Morgan, he did his summer internship in San Francisco, and the summer internship pay was based off a first-year analyst rate, just kind of a truncated rate, for the 3 months.
The hourly, the overtime in California.
Yeah, well, no. So his cost of living in San Francisco, he ended up he got the job at JP Morgan, but moved to Chicago and was being paid the same amount. And he's like, I'm living like a king in Chicago compared to San Francisco. And they had the same rates for everyone, whether you were in New York City, Minneapolis, San Francisco. It makes no sense. So I don't know if that's still the case, or if maybe they've started adjusting for cost of living, because if you're making the same, if you could make the same in Minneapolis versus New York City, I mean, I know which city I'd rather live in, but one, you're going to get paid a lot more than the other.
Exactly. And I would say that for most banks that, their main offices are New York, San Francisco, maybe Chicago. And so they're paying the same across. But it's something that's interesting because you start to see, a lot of people, especially during COVID, are like, I don't think I need to live in New York. And you see banks like, I was just down in Florida and Goldman opened a West Palm Beach office recently. So you're starting to see talent go to different places that, potentially, is going to kind of change what the normal compensation will be. Because if I'm a senior executive and I'm saying, okay, I got a lot of workforce in Florida, why would I be paying them the same that they would be getting in New York City, right?
Yeah, 100%. All right, I'm going to leave this up to the chat. If you guys have any questions about, banking compensation or investment banking in general, go ahead and throw them in while we got Mark on. But Mark, you mentioned you were just down in Florida.
Yeah,
You came on the stream with a nice glowing tan. How was it? What were you doing down there?
So I was down there with the sponsor of our podcast, CoinFlex. So our podcast is Big Swinging Decks, which is a play on the term Big Swinging Dicks that was made famous in Michael Lewis's book, Liar's Poker. And so down there, and it's really interesting because for me, I got into crypto a few years ago. I wouldn't say I'm an expert by any feat. And in having this sponsor, it's something that we really want to bring our kind of listeners, we call them shareholders, on this journey where a majority of the shareholders, they're people who work in traditional finance and, are not crypto naive, but they're not fully immersed in the space. And so we're trying to help create this environment, a learning environment that brings everyone, educates everyone along, right? So we're down in Florida because they were looking, CoinFlex was looking to expand and open US offices. And if you're a crypto company, naturally Miami is going to be the place that you're going to do that. And so we met with the Mayor Suarez, who's doing a phenomenal job kind of creating Miami as the headquarters of crypto. And you see that with FTX Arena, with all the companies that are moving there. And it's something that there's so much energy, so much excitement in Miami for this kind of whole, unique new ecosystem that's being built there. And it was phenomenal to see and to meet a ton of people involved in the space. So it's very, very exciting.
Yeah, and I mean, I'm sure you can speak to it more than a lot of us, considering you're in New York now, going to Miami for, and like you said, there was this whole idea of like Texodus, right? That all these tech companies were leaving New York, going down to Florida, leaving San Francisco, and coming down to Miami. And it's not really hard to understand why when you have, of course, the lower tax rates. Miami's not a bad place to live as well.
Exactly. I mean, you think about it. It's like, okay, I'm in San Francisco and I'm having to park and put all my windows down in my car so no one will break in and steal something. Or I could be in Miami where it's cheaper right now, but it's warm all the time. The people are friendly. It's super accessible to pretty much anywhere you want to go. Except I will say the airport, not as good as in a lot of other places. They cancel so many flights. But other than that, like, it's great. And I think it's always good to be in a place where people are moving to rather than people, are moving away. And I think you're going to see a lot of, whether it's tech, going to Texas, and leaving California, or regular financial services leaving New York and going to Florida. I think, we're going to see a lot of that in the future.
100%. Yeah. I mean, I know we're doing a lot more in Miami. We've got our cannabis conference coming up down there in a few months.
That?
That is actually April 20th, 420, like that week. Yeah, so
blaze it, love it.
Yeah, cannabis conference. We're doing a big cannabis conference down there. It's one of the biggest cannabis capital conferences in the world. So a lot of publicly traded cannabis companies, investors down there trying to slinging some deals.
Yeah, no, because it just was legalized in Michigan, relatively recently, right? And then it's going to happen in New York soon. So I know there's a lot of case studies of what people have done in Michigan. That's super exciting. So I know we'll be down there in April for Tech Week, but maybe we just will have to stay to see you guys. So are you going to be broadcasting live down there?
Yeah. Oh yeah, we're going to be doing lots of content down there. So bringing the whole mobile podcast kit, going to be interviewing people, the whole shebang.
I love it. Sounds great.
I got to ask, have you seen the new Carl Icahn documentary that's come out on HBO?
It's on my list. I've been too busy watching the Anna Delvey one so far, but it's been getting a lot of good reviews on Twitter from what I've seen. Have you?
Yeah. I started watching it the other night. It was not last night, I guess the night before, like when Russia officially invaded Ukraine. So I was watching
Russia invades Ukraine, and then you're like, all right, Carl Icahn documentary, got it.
Yeah, it's like that's how I'm gonna get filled in on this whole crisis. No, I put it on before, and then that started happening. So I was like more watching Twitter with the pressing global events rather than what Carl Icahn was doing 30 years ago. But it's a total like, it's basically like, liar's poker. It's just like Finbro. Like it's so good to watch. It's just amazing.
And from not having seen the documentary, but having read books about it, there's this kind of whole idea of finance, like back in the day, in the 80s, you have these power brokers, barbarians at the gate, all that I think isn't necessarily what it is now. And so it's funny to kind of look back on the history of all that and think, man, like prior to a lot of the regulation that's been taking place and, a lot of the things that have driven the market now, it was a very, very different place on Wall Street than it was today, where we're talking about, are the analysts at Goldman Sachs getting paid enough and do they need $10 more for dinner,
Can I get it back to the screen? Someone?
Yeah.
All right. Thank you.
Hey, there we
go. Sorry about that. They allude to that in the documentary because they show like when Carl Icahn started in the 70s or 80s or whatever. And they were like, yeah, if you weren't on Wall Street in the 80s, you just don't get it and you never will. And it kind of sucks because it's like, damn, that looks fun. Like, and I'm sure they had the same ideas as bankers now of like, oh, I'm working so much, like I'm making all this money, but what good is it? But like looking back on it, they're probably all like, you know what, that was pretty fun.
Yeah, exactly. I mean, just some of the stories that you hear that went on that, for better or for worse, they do seem fun and would be great to be a part of, but not going to happen in today's society or world.
Yeah, I mean, we can only live vicariously through Wolf of Wall Street and, other movies about Wall Street in the 80s. Exactly. Wall Street. All right, Mark, anything else on it? You have any thoughts on just like overall public markets right now or markets in general, public or private?
Actually going back to your Bitcoin comment on Coinbase, so there was that weird pricing discrepancy where it was like $3,000 different than on other exchanges. But from what I read, no one was able to actually execute any trades on it. So I guess you didn't miss out on anything yesterday. But it's pretty crazy that you can have that disparity happen, right?
Still, with how big Bitcoin is and how big the exchanges are, I honestly didn't look too much into it, so I was like worried people are going to be like, no, Aaron, you're crazy, that didn't happen. I was like, no, I swear I was looking at my phone and it said Bitcoin 33,000. I tried to get it filled. I only remembered it because today I was on my brokerage and it still said like I was taking some out of my buying power because I said I have a pending order. I was like, what's the pending order? And I looked into it and I was like, oh, that's when I tried to buy Bitcoin for way cheaper than it was worth.
Yeah, I love it. Well, going back to your question though, so oil, $100 a barrel, right? Something we didn't think we'd see 2 years ago, a year ago. It's kind of crazy. What are your guys' thoughts on where energy is going? Because it's fascinating to me, having done work for a few oil and gas companies, where a lot of this is you're kind of trying to anticipate demand in the future, right? And so in a time like this where the price is going up, then you're going to start seeing all of these wells going back into work, and it's going to be interesting to see the price action in the future. But it is something that when a situation like the Ukraine situation going on now happens, certain industries are disproportionately affected and it drives up prices. And war, unfortunately, is good for certain industries, which is kind of, it's one of those moral debates you have with yourself and kind of have stuff to think about when it comes to the investing process, right?
Yeah, 100%. It's like always, it's like a shitty feeling if like you profit off something bad going on, but at the same time, you want to like position yourself to be in a financially good position no matter what happens. One of my best friends is at Evercore, doing like IB for energy, and I talk with him about which he hates because he's busy doing this stuff all the time. So now when we talk and I'm like talking about oil price, he's like, I don't want to talk about this, but I make him sometimes. I wouldn't be surprised, and I have no clue, I wouldn't be surprised if we've seen the peak in oil, at least in the short term, because the big lead up was to this invasion and now it's happened. And something I would worry about buying oil here or buying oil stocks would be if OPEC comes together and essentially says, let's make Russia's oil less valuable by producing more, turning our spigots on. And that way, then some of those pressures that are driving the oil prices higher, saying, Russia produces this much, they'd say, okay, it's not a big deal if we produce more from elsewhere. But I have no clue. I mean, if the war escalates, more countries get involved, we could see oil 150. I have no clue. So I'm just speculating. But yeah, I mean, I never thought we'd see. I mean, even if you're looking at oil prices pre-COVID, like before the COVID crash, they were at like $70 in oil or something. So we're well above those highs. So yeah, I mean, all speculation. Who knows? That'll definitely be something that we're all watching is the price of oil in the next coming weeks.
Yeah, and it's fascinating. I remember as a banker putting together a lot of slides on companies actually when working with maybe your friend at Evercore, but a lot of kind of what you'd think about is how much exposure a company had to O&G, and it's something that it's really kind of it has long-term repercussions, right? Because it's like you have the whole ESG movement going on, number one, but also two, these things. It's not like it just kind of you flip a switch, turn a rig on, right? It takes time to get this done and to see the result, and so you do have to kind of really think about your long-term thesis when investing in a company with significant oil and gas exposure. Is this something that's going to continue? And kind of like what you said, I think this is kind of the peak in the short term for it, but who knows where this is going to go in the long term. But the narrative also is really interesting, kind of, this not necessarily a pushback on ESG, but just, hey, we're not as far ahead, of kind of transitioning to various different alternative fuel sources as maybe we thought previously.
100%. And we do got to wrap up here, Mark.
All right. Nice.
But it was great having you on. Hopefully again next Friday. Again, you guys can find more from Mark. You can follow him directly on Twitter. I'll drop that link. Also, Litquidity on Twitter, Instagram, you name it. Podcast out there, anywhere you listen to podcasts. Big swinging decks. Let's go. Mark, thank you again for coming on.
Awesome. Thanks so much, guys. Have a great Friday. Appreciate it.
You as well. All righty. Spencer?
All right, it is time to wrap it up. We got Moon or Bust coming up right now. The Moon or Bust guys are back. They were out. They were in Denver at ETHCon, and they have not released any content. They haven't showed us any videos that they made.
Are you being passive aggressive again?
No, I want to know right now from Logan and Ryan what happened at ETHCon, what they saw, what was discussed.
Is the redirect set?
Of course, it's redirect set.
We're gonna wrap up then. I will say I wanted to say this. My last thought when we were talking about energy with Mark. I think nuclear is kind of interesting right now.
You mean isn't it nuclear?
Nuclear. How did Bush say it?
Nuclear.
I never got that. Like, it sounds the same to me as he says it as I say it. But people always made fun of how he said it. Nuclear.
Nuclear. Anyway, Moon or Bust. They're talking nuclear and crypto right now. Stay tuned for that. We'll
Harry
catch you
Potter
guys.
Obama coin coming up now.